All right. Good morning, good afternoon. I don't know, good evening. Depends upon what time zone you're joining us from. Please chat in. Let us know that you hear us all right. My name is Don Kaufman. We're starting here momentarily. I can see the voice coming up on here. Hey, feel free to chat in where everybody might be joining us from today. I'm always curious. That's by the way, it's El Salvador. Nice. Vegas. It's getting good and hot yet. Wow. Nice. Everybody scattered everywhere. Austin, Fort Lauderdale, Arizona, Switzerland. Okay. Trinidad and Tobago. Well, you actually win for the closest person to me. I guess. I'm in the middle of the Atlantic myself. A lot of the times we broadcast from Arizona, but I'm back home. So we'll discuss that momentarily. Canada. Are you thawing out yet, Canada? It's a big place. Every place is frozen though in Canada. With that, I do believe it's about time to get started. Just making sure everybody's tuned in. You hear me all right? In fact, I'll tell you what. We'll pop the camera on here momentarily. Make sure you can even see us okay. So everybody good? See us okay? Hear us okay? Excellent. Just making sure. So welcome everybody. My name is Don Kaufman. We're again starting here momentarily. I start off with a couple of informalities. One of the first informalities that everybody asks every single time I come on and do a presentation: is this pre-recorded? Is it live? Oh, it's live. It's live. In fact, how live is it? If you didn't look at my screen a moment ago, I'm glued to it. So I'm a trader, and I'm actually going to probably have to execute a couple of trades along the way today. So when I say it's live, yeah, it's April 26th. The next question somebody inevitably always asks: can I ask questions? So if you see me looking around a little bit, it's I'll grab the camera in a minute, and a little later and show you, but I'm actually on 6 different screens. You don't need 6 screens to be able to trade. I use several different monitors, obviously, to be able to run, a presentation like this as well. It's easier, a little bit more convenient for me. So if I am looking around, I've actually got market over here, obviously market on the screen, and right in front of you. So again, don't be too distracted by that. I encourage, if you are tuned in live right now, which we have a fairly strong number of people on live right now, I actually encourage you, feel free to ask questions throughout the course of today's presentation. And I'll tell you right up front, if I do not hit your question while doing the presentation, or myself, by the way, we have Brandon Chapman answering questions, Brian Aponte, Jeff is on here answering questions. If one of us, excuse me, does not hit your question while live, we'll cover it at the end. I leave plenty of time for some Q&A. With that, I'm going to go ahead and get off and rolling here. I like to be pretty prompt on time. I've actually added a lot of slides, just given the fact that we're such a volatile marketplace right now. I think it's a lovely time to have this discussion. So again, welcome everybody. Today, of course, we're going to be talking about Ultima trades. So Ultima trades is the high probability income generator. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. We always love to throw the disclaimer along in here. And one of the reasons that I actually put this disclaimer up here is I did spend about 15 years in the brokerage world. I will discuss kind of my career in the brokerage world and kind of coming up through the trading world. We'll talk about that momentarily. But before we get there, hey, this is why you are here today. And again, I'm very adamant that we cover specifics, not only of what's going on in the market right now, but what is presently working, what's likely to work into the future. We're going to discuss this extensively. So this is why you're here today. First and foremost, we're going to discover why Ultima trades are ideal for the current market environment, so you can potentially generate monthly income. So obviously, I'm going to discuss monthly income in some extent. One other aspect before I really get into detail, because everybody kind of tunes in here and they zone out a little bit. Listen, I'm going to go through a tremendous amount of material. I am also a very strong believer of, this is kind of what I call no holds barred. If you want to see my trading account, you'll see my trading account. I trade both on Tastyworks. I also, of course, use thinkorswim. We show everything. When I say everything, you will look at every profit and loss, every balance, in any given time frame. I'm fine with sharing anything and everything in terms of P&L. I think very few people ever do that. They use a lot of slide decks and so forth. And you'll be able to see my account statement, profit and loss summaries, you name it, people. I don't have anything to hold back whatsoever. I'll discuss how much capital I actually use in the account. Again, I'm very much, and I like to hit you right up front with this, as I said, no holds barred, nothing held back. You get to see every nuance of every trade that I execute, and you're going to learn a lot about that strategy today. So we're going to talk in depth about Ultima trades, and I'm even going to describe what Ultima means here momentarily. We're going to talk about the trading symbols that professionals use on a daily basis to be able to create Ultima trades. You're going to learn how, okay, and more importantly, where to be able to find edge as a retail trader. We're going to learn to reap the benefits of high probability trades while learning, okay, how not to take large losses. You know, it's some secrets of not taking large losses, but listen, we're going to learn, okay, to structure some positions properly. And you're also going to learn what products, and a lot of people are not familiar with the term products. Listen, I don't care what you trade. You could trade stocks, you could trade options, you could trade futures contracts, you want to trade crypto, you want to trade currency, let's do it. As long as if it's a fair marketplace, I'm all for it. And I trade, you know, I'm an equal opportunity trader. But we're going to learn what makes some of the best candidates and what is a recipe for disaster. And, you know, the interesting thing that I find, and I've been in this business now since the late 90s, people are drawn like moth to the flame on stocks that will destroy them. By the way, feel free to chat in over here and go, me. Believe me. Believe me, people are drawn like moth to the flame to, you know, the GameStops out there, the Teslas. Tesla's a widow maker. I mean, look today. All right, before I get too deep into this, there is an indicator that I use incessantly. If you've ever tuned into a YouTube video that I do weekend YouTube videos. I usually do like a Wednesday night video as well. And those kind of, you know, updates that I do, I use this indicator called the expected move indicator constantly. It's a $500 value. We will give you the auto expected move indicator. You know, years ago we didn't, and it was just like everybody's like, please, the indicator, the indicator. And again, we want you to have the right tools to be effective in this business. It's our gift to you. Stay with me right until the end of the webcast, and we will go ahead and give you a link directly to the auto expected move indicator. And some of you I have no idea what it is. So here's, you know, it's interesting because I took a screenshot yesterday, and the screenshot is interesting because it's Walmart, and you go, that's the least interesting stock on the screen. But what was so unique about Walmart is Walmart was displaying just wild behavior. And these are what we call breaches of expected move. And if you've never seen this study before, you know, again, as I said, I like to make everything very dynamic. Like I hate using like stagnant quotes. You know, come in here to something like NVIDIA. NVIDIA has been Mr. Toad's wild ride and apply auto expected moves. And what the auto expected moves do, and if you're following along, you know, playing the TheoTrade at-home game, this little dark line in the middle, that's where the week starts. This is the upper edge and the lower edge of expected move. What expected move is, okay, it is using option markets to handicap forward risk. So these lines, they don't change, okay? They're designated on a Friday for the next week. And they say, hey, based on option markets, for example, we're supposed to be up $10 or down $10. Now, it doesn't have directional bias, okay? But if you see an underlying cracking outside of what it was expected to do, right? There are phenomenal numbers of opportunities to build trades around that, risk management around that. Again, I could go on for days about the expected move indicator. We will provide you a copy of the expected move indicator. Again, stay with me right until the end of the webcast. It's our gift to you. I'm emphatic about the use of this. It's not like a technical indicator like a MACD or Fibonacci. Again, it's using, okay, option pricing to give you forward risk. All right, few housekeeping items. Listen, I'm going to go through a tremendous amount today. I urge you, okay, that you took the time to be here. This is important. Focus on being here. This is a skill set. It's going to take time to acquire. You know, this is not going to be necessarily like the instant coffee, instant tea. I like to challenge people. You came here today to learn something. You know, this is not going to be, you know, the MACD, the Fibonacci, the Bollinger Band. Did the Fibonacci people make you do it? Right? This is not going to be red and green flashing hours or something like that. This is a skill set. Shut the door, turn off Skype chat, whatever else is distracting you, close Facebook, get rid of Facebook. Okay, it's okay to look at Twitter again. Anyway, phones on silent mode, definitely kick out the kids, the grandkids. You took the time to be here. Serious, focus on being here. Here's a little bit about me, and I'll give you kind of the, the dime tour. So right on the top of this this slide, it says, I watched order flow for 15 years. And that is in large part what has brought me to you to this day. I'll just tell like a brief background story. So I actually grew up around traders, market makers. So, you know, grew up in the 70s and 80s. And I had an uncle that was a market maker in Chicago. He started a trading firm. If you're from the Midwest, you've possibly heard of the firm. It was called O'Connor and Associates. He owned over 500 seats in exchanges around the world. So I kind of had a natural inclination. I kind of understood a little bit about the business. I didn't do a degree in finance, nothing of the kind. And right out of college, I got involved in trading, and I went to Chicago. You know, I went to college actually in Arizona. Moved out to Chicago and started trading 3 weeks out of college. Like I literally went from like ramen noodles to the Chicago Board Options Exchange. A couple of years after I started trading in Chicago, I was actually invited by some gentlemen that I knew from the OEX pit. They invited me to a startup brokerage firm. Well, guess what? That brokerage firm turned out to be thinkorswim. So I was an executive at the thinkorswim group. I actually built the education division of this company called thinkorswim. And some people have heard of thinkorswim and some haven't, and that's okay. So I was there when we went public. That was in 2007. I was, of course, there when TD Ameritrade acquired us in 2009. I went on to run education for all of TD Ameritrade and their 7 million clients for approximately a period of 5 years. I exited TD Ameritrade in 2015. People always ask why the exit. I had a 5-year lockup clause at the end of 5 years. I planned for years. I hung it up. I spent all of about 4 weeks at home. And while at home, I just talked to my computer while I trade throughout the course of the day. My wife said to me, she says, you should put a microphone in front of you. She goes, first of all, it's kind of amusing. Secondly, she goes, people might actually want to hear that. And here we are. TheoTrade was born. And again, that was 2016. We launched TheoTrade. Obviously, it's 22. Theo's been around for a number of years now. So a little background, though, on what you're going to learn today is watching order flow gave us an invaluable skill set. And I say us. TheoTrade is not just me. It's not just the Don Kaufman show. TheoTrade actually consists of a number of individuals that did work with us originally at thinkorswim. We also grabbed a few individuals from around the industry, the trading industry. All of our instructors that are involved have a minimum of 15 years of experience in the financial world, some of the brokerage world, some of the market making world. Some of us actually come specifically from like hedge fund worlds, again, to bring TheoTrade together. Every one of us is still extraordinarily active in trade. What you come to learn here today, a lot of that comes and stems from the knowledge and the skill set of thinkorswim and TD Ameritrade. And that is, we had access to your order flow. Imagine being able to see the order flow of 7 million clients and actually having a full group. We had a group at TD Ameritrade. We can actually go in there and ask any question you could dream of about, hey, what trade makes money? What trade doesn't make money? Imagine for those of you that speak a little options geek, you could ask this group, hey, do people make money in iron condors? And they can actually look in the data and say, well, they make money in iron condors if they did them in the SPX, but they don't make money if they did them elsewhere. Okay, the insight that we had, okay, apologize, I'm turning the air conditioning up over here, cooking in this room. The insight that we had to your order flow, okay, is not just invaluable. It's exactly what we built here at TheoTrade. What we learned at TD Ameritrade, because of regulations, couldn't be used at TD Ameritrade. We're using that information, though, presently here at TheoTrade. And the information you get today literally comes from watching billions and others' mistakes with the knowledge of what works best for retail traders. If you ever need to get a hold of me, and I'm very adamant about this as well, support at TheoTrade.com. Just hit me up anytime. It's important that you know, again, we use a common inbox, support at TheoTrade.com. Just put Don Kaufman in the subject matter, go right directly to me. All right, this is me at TD Ameritrade TV. I do a weekly spot on TD Ameritrade TV. I do hop on CNBC from time to time. That's myself pitted against Kevin O'Leary. Over the years, I've done just innumerable spots on media and so forth. I try not to do too much CNBC all that often. It's a little bit more taxing these days. So let's get down to business. What are Ultima trades? Let's actually start to just bridge the way and start to talk a little bit about trading. How many of you that are tuned in live right now have some experience in trading? Okay, it can be me. You can say no, it's okay. Y for yes, N for no, okay? We're going to get into, and some people are brand new, they just have absolutely no experience. And there are times when I come in here and I say to myself, I'm like, I wish they had no experience, because we could start with a kind of a blank slate, but most people do have degrees of experience in this business. So set aside any preconceived notions today. And I really mean that, because this is not going to be directional at all right? This today is expressly about volatility. So we're going to trade, and we're actually going to see degrees of profitability via volatility. And there couldn't be a more volatile day to have this discussion. I mean, this is where it's at, people. When I say this, okay, this is where it's at right now. I mean, today, this is Mr. Toad's wild ride. And there's not too often I say this when I'm doing like live presentations, but believe me, I have an eye pegged on this marketplace right now, because we are on the edge right now. I'll just tell you, this line, 42.11, we crack much below that, and it is going to be on. You're going to see an absolute fireworks show in today's marketplace. I'll come back to that. I'm going to explain what Ultima trades are. So higher volatility has resulted in significantly more options premium, okay? Now, that makes options prices higher. Now, for those of you that are tuning in, a lot of people, they hear this options word and they go, whoa, I'm not ready to talk about options. But options are the gauge of like volatility. You know, you can say this stock moves a lot. That's hard to kind of quantify. Options are really good at quantifying. Like, how many people here have heard of something called VIX? Huh? Anybody ever heard of VIX? S&P 500 Volatility Index. So I actually traded for quite some time in VIX. So here's VIX. All right, this is kind of what I call my my predecessor's volatility indicator. So a lot of people don't really know. By the way, VIX is in the 30 range. All right, VIX is in the 30 range. You can say, like, historically speaking, look back over the last 10 years. I'm just going to put my mouse on it. That's where VIX currently is. Ooh, yeah. You realize that over the last 10 years, that's 10 years of data. That's right. That's a 10-year weekly. You can pretty much count, okay, on one hand, the number of times we've really breached into that. Now, there might be consecutive days above there, but you could pretty much count on one hand. You're like, oh, okay. Here's the one thing you have to understand about Ultima. From the onset of COVID, a huge amount changed. Volatility took off. Option implied volatility, Skew, hit record highs. And if you now look at Skew, you know, I'm going to show you Skew. The volatility remains at record highs, which is Ultima. When people see the term Ultima, they think it means ultimate. It doesn't. It has to do with the volatility. In this business, there's volatility, okay? What describes volatility is something called Vega. Vega, okay, is a sensitivity, okay, to changes in implied volatility. After Vega, there's something called Ultima. Ultima is the change in Vega. Right now, money can be made in what is using Ultima. I am going to explain to you in the most, okay, common terms how you can actually take advantage of Ultima. And I am more than comfortable. People say, well, you're showing your trade, you're showing your edge. Okay, it's still going to be there. This started shortly after COVID, and it has not only remained, it's actually improved substantially since the onset. Okay, and I'll even explain why. So again, we're going to talk a little bit about skew. We're going to talk about volatility, the volatility. In fact, when it comes to skew, people get all bent out of shape. Like, I don't even know what skew is. And this guy's talking about Ultima. Okay, calm. Keep your wits about you. When it comes to skew, you know, like everything you do in your life can kind of fit under one of these like normal distribution curves, right? Okay, that's a normal distribution curve, but then there's skew distribution curves. Well, skew can make trading rather advantageous. One of the things that you got to focus on here, this is actually a history of skew. Look, that's a full 15 years on skew. And skew, okay, from 2020, I mean, you can see it is on right now. There's a tremendous amount of skew, and you're like, what is skew, right? You know, this is not exciting to me. I don't even know what skew is. How can we use skew to our advantage? Skew provides edge. Skew provides edge. And specifically in this case, it provides edge in the sale of out of the money options. And again, I said the O word. Again, many traders are currently buying options and in effect tweaking pricing to be beneficial for premium sellers. So let me explain something. Are we going to talk a little bit about options today? Absolutely, unequivocally, yes. There is a incredibly hands-off trade that is presently available and has been available now for a period of over 2 years involving Ultima. To go after that particular edge in that particular trade, all we have to do is understand, okay, some basic aspects about options trading. Just very, very basic. I'm not asking anybody to get into anything extreme. I am also going to say this before I even get into it. Do not tell me about margin. Don't even worry about it. Anything that I discuss today, and I really mean this, can be done with a $2,000 account. Don't tell me you got to have $1 million in your account because I think it's ridiculous, right? We understand that everybody coming today doesn't necessarily have, you know, significant amounts of capital. So with a $2,000 account, you can do anything I'm going to talk about today. But so I said the O word. Are we okay? Are we okay? All right. So I'm looking over here because this is where the Q&A happens to be, and I'm watching people. They're foaming at the mouth at this point. She said the O word. Anyway, many people opened up accounts, and I'll just give a quick example. Tons of people opened up accounts right after COVID. Places like Robinhood, right? And actually, one of my closest friends is now one below the CEO of Robinhood. He's running the day-to-day operations at Robinhood. But tons of people opened up accounts post-COVID. And Robinhood said, come, trade options. But they really only let you buy options. They don't let you sell them. Think about that for a second, because they go, you're not approved to sell options. You're approved to buy options. Do you know how many tens of millions of accounts opened? Think about it. I just want to know how many tens of millions of accounts have opened just on the buy side. They go, oh, you can buy options. You can buy options. You know what that's done? It's called retail traders gone wild. You know what? This is actually the OCC. That's the OCC. It's the Option Clearing Corp, right? That was April 22nd, which was Friday. I saw yesterday we actually did 44 million, but on Friday, we did literally 46 million option contracts, 46 million contracts. You know what the crazy thing is? The average year to date, we're doing about 41 million. Last year, look, that's in April of 21. At this time, we were doing 34 million. Year over year, options, they just keep picking up more and more and more. Why? More of you, more retail. By the way, retail, it's not a dirty word. I'm not a market maker anymore. Okay, I'm not in the brokerage business anymore. I'm retail. I'm retail, baby. I sit at home and trade exactly like any of you would. I have the same type of account, other than some corporate accounts that I set up from time to time. But this number is phenomenal. And you have to realize that this number grew exponentially. It's retail traders gone wild. People are buying options like crazy, and they're skewing the markets. It's why we're going to learn to actually sell them. Many of you have heard through the grapevine that selling options is a great way to make money. Yeah, how many people have actually heard that before? Huh, maybe. Show of hands. Yes, no, maybe so. Okay. It's one of the reasons I like doing this live is I'm just waiting for responses. I mean, how many people have really heard that though? You kind of hear through the grapevine, but not everybody necessarily knows how to sell option premium. And more importantly, if you've experimented with selling options, you're going to know real quick. You're like, there's a lot of risk, and there could be a lot of risk, right? So what we're going to talk about today, okay, especially today, because this is what Ultima is about selling options premium. More importantly and more appropriately, we're also going to talk about how to sell options premium, not take extraordinary amounts of risk, because that's what'll beat you up. A lot of people are into selling options. Okay. Some people do. And what happens is they make money, make money, make money. And I'm just going to give you the big lowdown right now. People that sell options that don't really know what they're doing, make money, make money, make money, make money, make money, hit by a train when they were looking at how much money they were making. They get hit by a train, they lose, a chunk of your account. I'm not going to do that. That's not what we're here for. Today's session, I'm going to separate myth from real risk, fact from fiction, all about option selling. And again, completely and utterly no holds barred. If you ask me a question about my account, I'll show you. You want to know what I'm making? I'll show you. I have nothing, nothing up the sleeve here. Look, here's one account. Actually, there's two accounts in here. Okay, there's one account over here. There's another. This is a smaller IRA over here. Okay, you can see the P&L on the day on each account. This is actually Tastyworks. I have a multitude of accounts at Tastyworks, another IRA here, another larger account over here as well. But get to see every single account, IRA, standard margin accounts. It's all there for you to take a look at as well. All right. So as we kind of get into this, and again, I'll be more than happy to show you P&L as we go along. So don't panic, all right? You may know nothing about options. That's okay for today's session. I just want everybody to understand this. As we go into this today, some of you have heavy experience in options. Some of you have absolutely no experience. This particular presentation is geared towards both ends of that spectrum. So by all means, sit back, okay, understand that if you're an absolute novice, if you're a novice and you've never traded an option, look to grasp big concepts, probability, risk, right? Just understand bigger concepts. For those of you that are more experienced, you want to actually grab the little nuances. You want to grab like, what am I actually trading? Okay. When I say, what am I trading? What products am I trading? How far out in time am I going? What delta might I actually be using, right? The last part, I've already mentioned this, and I mention it again, selling premium. You can now do it in accounts with as little as $2,000 in a margin account, $5,000 in retirement accounts. You can do everything I'm talking about in retirement accounts. In fact, one of the accounts you're going to see, this is a retirement account. All right, is my IRA. So let's get into it. Let's jump right in over here. All right, the scuba diver. Okay. Well, I don't think I mentioned this, not to torture anybody that's up in Canada freezing, but I'm broadcasting from St. Croix in the US Virgin Islands. This place is like the mecca of trading, and it's out in the middle of the Atlantic. A lot of hedge fund managers and so forth live on the island, and was invited down here by a buddy of ours, and we never left. Just after the pandemic, we never left. I go back and forth between here in St. Croix and Scottsdale, Arizona. All right, so let's get to the many facets of selling premium. When we talk about selling premium, it can be referred to in a number of ways. Selling premium means selling options. It means credit spreads. It means short call spreads, short put spreads, delta neutral trading, selling naked, all right? Selling premium, it can be construed as bullish and or bearish, but generally selling premium, and especially today, will be construed as market neutral, meaning that I don't have any skin in the game for whether I think we're going higher or going lower, not with my premium selling positions. Now, probability and profitability. Everything you do in trading is based on probability, right? One of the questions that I get constantly, okay, here, there, everywhere in email, I get people every single day that send me an email and say, how often are you right? And I'm like, I don't know, 90, 95% of the time. Like within about 10 seconds, I could teach you to be right 90% of the time. But being right does not always correspond to success in this business. And I am just going to hammer that for a second, because personally, I am really bothered by, there are tens of thousands of websites that teach this, kind of stuff and trading, and they go, follow me, I'll make you right. Being right doesn't make you money, okay? Probability alone does not make you profitable. Remember that. Anybody can go onto a trading application. Just bear with me for a second. They can go into a stock like NVIDIA. They can look at an options chain, all right? Let's open up an options chain. They can change this from volume to called probability OTM. That means probability out of the money. You ready? I could go out there and I could do this trade. Oh, it's a miracle. I'm right 90% of the time. Look, probability says I'm going to be right 90% of the time. That's it. I said it took 10 seconds to figure that out. That's not what we're here to do. We're going to teach you to be able to go out to sell options premium, to get back to hedge, all right, and to not have to deal with significant drawdowns. Markets are always a trade-offs. Higher probability can be higher risk. You can be right 90% of the time, but you can still lose money. So where can you find edge? And what I want to talk about, okay, for a brief moment is that term edge. Most people don't know what it is. I don't want to sit here and, bark at you guys. Well, again, the MACDs and the Fibonacci's, and okay, that's not edge. Edge is a mathematical way to solve for if you did something in this business 100 or 1,000 times, that you are mathematically coming out ahead in the long run. People, that's edge. If you can sit there and mathematically like proof, hey, listen, if I did this particular position, I mitigated exposure, like that's how I'd come out ahead. And that's what people are here for, right? Okay, good, because we're about to get into something very, very important. So this is the first time that I've really talked about probability and premium selling tactics. I'm going to start a little more basic, and then I'm going to start to work into the extreme. So hang with me, because I'm going to go through some examples here, and I'm actually going to grab my little write-on board and make sure that everybody's on the same page before we kind of move forward. So here we have a stock at 50 bucks, right? I'm just going to circle it, stock, and I'll even call it stock, okay? Because it doesn't matter what the stock is. So this is a stock, it's at 50 bucks. Now, do I want to own the stock? No. Why not? I don't know, it ties up 50 bucks. Pretty good reason, right? Now, people look at this stuff and they think to themselves, well, but today's a really big down day. Maybe I should go out and buy something. Buy something. Why tie up that kind of capital? Why have $50 of risk? Like, it doesn't make a lot of sense. Like, if you want to go out there and say like, no, I'm a long-term investor, I'm cool with that. Okay, I'm totally and completely fine with that. But for today's and for argument's sake, let's actually worry about generating monthly income without having to necessarily substantiate risk of stock. Because in my estimation, having $50 at risk per share is tremendous. It's just tremendous. You go, wow, but it's not going to go to zero. You're right. It can only go from 50 to maybe 25 or maybe down to 10. I mean, there's a catastrophic amount of risk, especially right now, right? I don't mean because the market's heading down today. I mean, you got Google earnings today, you got Microsoft earnings, throw a little Apple in there later in the week, maybe a little Amazon, huh? Who's going to miss? Who's going to miss? You want to put a nail in the coffin of this marketplace? Why don't you have Google and Microsoft miss in the same day? If you don't think you have $50 at risk, you're right, you don't. You got at least 10 or 15 at risk. We're not going to go out there and even own the stock. What I want to do is just teach you the concept real quick of just generating a high probability trade. I'm going to go all the way up here. What's up here? Okay. I'm going to go out and initially, and again, I know some of you don't even know what an option is. I'm going to sell a 60 call. And for that call, I'm actually going to collect a $1 credit. Now I'm going to write it down here. So we're going to go out and we're going to sell 60 call And for that, we're going to collect a $1 credit. Now, let's make this good for, I don't know, 2 months. Time out. There's a lot of people that are tuned in today that have no idea what a 60 call even is. Okay. So I'm gonna backtrack a little bit. I'm gonna work you through what an option happens to be. So hang with me. Don't get all kinds of punchy. So here we have a stock trading at 50. Do we own the stock? No. Do we want to own the stock? No, not really. I just go out and sell a call. You go, whoa, time out. How do you sell something you never owned? Let's get down to it. In options, if you've never traded in an option before, that's fine. But in options, you can be a buyer or a seller right out of the bat. All right, right out of the gate, you can be buyer or seller. So let's talk about being a buyer. What is a 60 call? 60 call, for those of you that have never had experience. And again, I promise, for those of you that have had experience, if you have had experience, we're going to hammer you in a little while, because I'm going to go from like some of the basics to some of the extreme here. Again, this presentation is going to be on both sides of that. A 60 call. What does a 60 call give you the right to do? If you were a buyer, it has a right to buy the stock at 60. Huh? So if I went out, I can make a decision here. I could either be a buyer of the 60 call or I could be a seller of a 60 call. You go, well, why would you ever want to sell something? Why would you want to do that? I have a good reason for that. You collect a dollar. Why would you want to buy the 60 call? You would buy the 60 call. Let's talk about that for a second. In this business, there's buyers. By the way, buyers, palm towards me. Sellers, palms towards you. If you watch like back in the olden days when they used to trade on the floor. Okay. By the way, I was the last of the breed that actually stood there. Buy, sell. It is so archaic when you think back. By the way, I only spent like 18 months there because they were like closing down the floor already by 2000. It was the internet age, man. It was AOL and Time Warner. I was actually there when they put that company together. You're like, if this is not the end of the marketplace, I don't know what is. Anyway, so let's say we went out and bought the 60 call. So go out there and buy the 60 call. What's that give you the right to do? It gives you the right to buy the stock at 60. I know that says sell on the screen, but forget that for a second. Let's talk about being a buyer of a 60 call. If you're buying a 60 call, you're paying $1 for it. Now, where do you want the stock to go? You go up. Oh, please. This is what we call a YOLO trade. You only live once, right? Okay. And the YOLO trade is what everybody was doing. It worked. That crap worked in 2021. It ain't you ain't in 2021 anymore, are you? Okay. Click your heels 3 times and then don't look at the market, because there is no place like home. Anyway, if you look at the buying of the 60 call, you could buy a 60 call and you could buy it for $1. But then you're going to need the stock to get to 61 just to be able to do what? To be able to break even. It's not so easy. Stock's got to go from 50 just to 60 for you to even get close. It's got to get to 61 for you to start to, mature and make some money. It would be a dramatic move for a stock to go from 50 to 61. Are we right? Okay. But you know what? You paid $1 for it. Could the stock go from 50 though? And I want you to think about this. Could the stock go from $50 and jump and get crazy and go all the way to 70? It could. And if the stock went from 50 to 70, let me ask you something. If the stock goes from 50 to 70, what does a 60 call make? Well, a 60 call gives you the right to buy the stock at 60. If you could buy the stock at 60, can you buy the stock at 60? Yes, you can buy the stock at 60. You could buy the stock at 60, turn around in the open market, sell it for 70, you'd make at least $10. Okay? You'd make at least $10. You go, oh, minus the dollar, of course, you paid for it, so you make, net out 9. Oh, yeah, maybe. Are we okay? Making sure. Because that's why somebody buys a 60 call, because they think the stock's going to 70. Will the stock go to 70? It's unlikely, but anything is possible. Okay. We're not going to go out in this first example. We're not going to go out and buy the 60 call. Why? Well, because we like to sell 60 calls. Why do we like to sell the 60 call? I like to sell the 60 call because, frankly, I want to collect $1. How do I collect $1? I just go out there and I sell the 60 call. Then what do? Okay. Do I own stock? No. You go, whoa, this is what is termed sell it naked. Sounds dirty. It kind of is, because you're selling a 60 call. What's the most you can make? And one thing you got to understand about this business, if you sell something for $1, the most you can possibly make is $1. It's like selling a car. If you sell a car for 50 grand, nobody comes back a week later and they go, I love the car you sold me. It was like so good that I've decided to give you an extra, 10 grand on top of it. Just ice the cake. right? Listen, if you sell something for 50 grand, it's over. It's 50 grand, it's done. If you sell something for $1 here, it's over, it's done. You collect $1. Only problem is, are you going to keep that dollar, right? So what can happen after you sell the 60 call? And again, we're going out there, and just for this example, just ease up on me for a second. We're going to sell a 60 call, and this is when everybody goes, I don't have the margin to do that. I know. Don't worry about margin. Don't worry about how much capital. I'll teach you how to circumnavigate all that. All I want you to understand from a probability point of view, you go out there and you sell a 60 call, and by selling a 60 call, you keep $1, right? How do you keep the dollar though? If the market stays flat, what happens to a 60 call 2 months from now? It expires, worthless, you keep $1. If the market goes down, what happens? 60 call expires, worthless. What do you get to keep? $1. If the market goes up, okay, let's get crazy. Say it goes up to 55, what happens? 60 call expires, worthless, you keep $1. If the stock goes to 60, what happens? You wet your pants, but you still get to keep $1. When do you really start losing money? Basically, it's 60 plus $1. So you'd start losing money at about 61. What happens if the stock went from 50 and jumped to 70? You go, bleh, okay, you would get crushed, but you still got to keep the $1 minus, of course, the $10 you lost in the trade. All I want to get you to understand from this point in time, okay, is this a high probability trade? Yes or no? Just a Y for yes, N for no. It's okay, right? Is this a high probability trade? Anybody? Awkward pause. Stuff is not helping the situation. So it's imperative that we understand. Don't worry about the risk yet, because we're going to get there. So we're going to talk about risk. We're going to talk about board. It's an incredibly high probability trade, unequivocally a high probability trade. You go, how do you define probability? Well, let's take this trade, okay, this so-called trade. Let's take it into the live market. Give me a stock, okay? Give me a stock that is liquid, all right? Give me a stock that's liquid, I don't know, and trades around 50 bucks. Is there one? Okay, anybody? Give me a stock that's around 50 bucks that's liquid. Okay? Again, I don't want to come in here and start feeding everybody. Okay, FCX. I haven't looked at FCX in a long time. Freeport. Nope. Okay, so Freeport. It's 40 bucks. That'll play. 2 months out. Okay, let's actually get to a high probability trade. How do I do this? See where this says prob OTM. You know what prob OTM means? Probability out of the money. So if I went way out of the money, like I'm not collecting that much, but I just want to show you, look at this, okay? This is actually really similar to the example. Like this is a $40 stock and now I'm selling a 50, okay? I'm not collecting quite $1 here, but look, this is a 90% probability. I just wanted to show you from a probability point of view. Again, don't worry about how much money you're making. Don't worry about any of that. First, we want to grasp the concept of probability, and then we're going to start to drive forward from there. Right? And things get much more interesting as we actually go along. Okay, Facebook. Is Facebook a $50 underlying? Is it? Yeah, you can look at Facebook all day long. Facebook though has got earnings coming out. Face plant. Okay, that's getting old. Here you go. 235 calls, 90% probability. Like any product that you want can be applicable, but I am going to tell you, there's definitely better products. When I say product, remember, I don't care whether you trade stocks, options, and futures, like nothing matters anymore. Like, what about Bitcoin? Here's Bitto, Fido. This is actually ProShares Bitcoin, Bitcoin. Could I actually do something like this? Of course you could. In fact, Bitcoin's got some rockin' volatility in it too. So don't ever limit yourself, right? All I wanted to do is just, walk through this idea that by selling something way out here, it can give us like a 90% probability. And again, I just want you to understand conceptually that 90% of the time, you're going to make money. You go, what happens the other 10% of the time? Don't worry, you're going to find out. That's exactly what I just want to get you to that point. Again, what I'm trying to do right now is just systematically kind of build you up. Even those of you that think you understand this, I'm going to show you something that's going to blow your mind here momentarily. So selling options equals positive time decay. When you sell options, like what really happens is every day that passes sees the dwindling of options premium. As time passes, the options you sold decay exponentially. So let's take a minute to review time decay. I can show you time decay here on for instance, Tastyworks, Tasty. So on Tastyworks, okay, there is a column in here called theta, and you can actually see my theta. This one little position here is about, oh, it's about $38 a day. This one's got some theta. This one's got some theta, and theta is the daily whittling down of an options value. And that's kind of confusing to people. Basically, everybody has seen one of these. Like if you've ever traded options, you've seen a decay graph. And what happens to people in this decay graph, right? Okay, again, those of you who've traded options, a lot of people, when they first get involved in options, whoa, look at that. That was huge, huge. Look at that. It's like, my width of my pen changed. It's diseased, okay? When you go out and you learn about options, a lot of people initially go out and do what? They buy options. And when they buy options, what happens? They suffer the wrath of time decay. And by the way, you would understand that if you've ever bought an option, because your time decay graph looks something like this. That's you. You go out there and you buy an option, and the option costs you $3. Okay. So I don't know, let's make this a 100 call and you pay $3 for it. And then a few days goes by, and what happens to the option? So you bought this option, you paid $3 for it. A few days goes by, nothing happens to the stock, and the option decays. Now it's only worth $2.80. Then a few more days passes, and all of a sudden, you lost 20 cents, and then it starts to accelerate. Now the option's only worth $2. Then you start to get to the exponential amount of this, and it goes from $3 to $2.80 to $2 to $1 to all of a sudden it's worth what? 40 cents. You say, oh, screw it. And then it's worth 0. Anybody ever experienced that? Okay. By the way, you got to understand something a little bit about my background. I know, again, people have gone on all kinds of webinars, all different people teaching this stuff. Listen when I say this very carefully. The buck stops here. Whatever you've ever done in this business, I've seen it all before. I spent 15 years, okay, behind the screens of thinkorswim watching people trade. You're like, what do you mean? I know everything that you're going to do. I know everything that you're going to think. I know that when you email me and you buy something for $3, you go, good, I hope the stock goes up, because you bought a call and you hope the stock goes up. Stock doesn't go up. Your first instinct when the option drops to 280 is, I'm okay, I'm okay. Nobody ever says I'm wrong at this point. They just say, I'm okay. Then the option drops to $2 and they go, oh, I'm in trouble. I'm in trouble. Okay. And then the stock moves against you and the option dips all the way down because time's moving over $1 and you go, oh, I'm really in trouble. It's all over now. And then the option goes out worthless. How many people have ever experienced that before? Come on, admitting it's the first step today. Okay. What I want you to understand, okay? What I want you to understand about this, nobody's ever experienced that, okay? Well, no, mommy, okay? I love that, all right? Again, you have to admit it. By the way, if you haven't experienced it, it's simply because you've never bought an option before. Every single person that's ever bought an option in the history of options has experienced this. But the one thing that I want to hit you with is this. What you're going to learn today is that this time decay graph is all wrong. That is what Ultima is in very large part about. And you go, what? Okay, time decay graph is all wrong. Because when you look at a time decay graph, this is what we call near money decay. This is for people that are experienced. Near money decay. That's options. Like, for instance, if a stock is trading at 100, this is options that would be near 100. What happens if we didn't trade near money options? What happens if we traded way out of the money options? Well, you're about to find out. Welcome once again, probability and premium selling tactics. What we're going to introduce you to, the first step you're going to take towards Ultima, is understanding where edge lies in today's marketplace. So in this example, I'm going to change things up a little bit. If I change things up, watch what I'm going to do. I'm going to come out here now, and do a very similar example to last time. I'm going to go out, okay? Now I'm going to sell, in this case, a 120 call. And that 120 call, I'm going to make it trading for exactly a $1 credit. Now let's get crazy. Let's make this one 3 months. That's going to drive those of you that are experienced out of your minds, right? So I'm going to take it down here and just draw it out here. Sell the 120 call. We're going to sell the 120 call. We're going to collect $1 credit. Now I know somebody's initially going to come in here and go, what about margin? Don't worry. I got you. Okay. I know where we're headed with that. Well, I don't have the margin for this. Okay. That's because you're thinking, all right, from a classical standpoint of what option premium selling has been. But Ultima is going to deviate tremendously from that. And you're thinking, nah, there's nothing new in this business. Maybe there is. Okay. Maybe you're going to learn something here. We're going to sell a 120 call. Now, a 120 call, stock's trading at 100. We're selling the 120 call. That is 20% out of the money. I also want to alleviate you. So don't worry about margin. And the other thing is, I'm talking about calls today because I think it's easier to interpret than puts. Like, could you talk about puts? Of course, we're going to bring up puts a little bit. The reason I use a call, it's like, it's a singular, it's easy, you know, it's the right to buy, except I'm selling the right to buy, which blows everybody's mind. But could you imagine selling the right to sell? Oh, no. Anyway, I'm selling a 120 call. And the 120 call, I mean, this thing is way out of the money. When I say way out of the money, I'm like, I'm selling the 120s. Stock is here. Okay. And I'm selling something so far out. You're like, you know, if this was a stadium, you're sitting in the parking lot. You know, you're tailgating. That's how far you are away from the action. That's the point that I'm trying to make. I'm not selling any near money options. Now, what's the most though I can collect? This is $100 stock. This is the beast. The most I can collect is $1. Can I make more than $1? No, I can make $1. You go, I don't want to make $1. How about this? We're only going to make less than $1. What you collect is inconsequential. I'm just using it for an example. And the next thing you look at this and go, I don't want to wait 3 months. Nobody said you had to wait 3 months. Said you know, you want to make monthly premium, this is the way to do it. So we're going to go out there and we're going to sell a 120 call. We're going to collect $1. Then what do? Absolutely nothing. After a couple of weeks, I'll exit the trade. I'll make money. I'll move on. Sound reasonable? You go, okay, but what's the risk in here? I'll tell you exactly the risk. Okay, look, here's the risk. What if the market stays flat? If the market stays flat, I keep $1. What if the market goes down? Oh, the market goes down, I keep $1. What if the market goes up? I go, I get nervous, but I probably still keep $1. What happens if the market goes all to 120? I wet myself, but if the market gets above 120, first of all, as the market's going up 20%, you do have a lot of time to exit. I'm not saying that you're going to exit. You do have a lot of time to exit. You can do mitigation of risk, you know, take, you know, reverse maneuvers, duck, dive, jump, get under the desk. There's a lot you can do in here. But I just want to give you the feeling that, okay, you're not going to sit here for 3 months and do nothing. We're going to make money like that, and we're going to get out of this thing. How are we going to do that? Well, I'm going to show you. Let's take this example, okay, and bring it into the marketplace. Before I do so, I want to ask you something. Do you think that this is a high probability trade? Okay. What do you think it is? The probability, that is. What do you think the probability in a trade like this is? Okay, sky high. And you're 20% out of the money. It's the nosebleed seats. Now, I just deleted it out. I just want to go through the concept again. And the reason I wanted to go through the concept again is now we're going to bring you into the real markets. Okay, BITO, FIDO. When I say we're going to bring you into the real markets, oh yeah, we're going there. So let's go to a marquee product. I like to use the spiders because I think the spiders are the easiest to understand. What are the spiders? Okay, for those of you that are a little new, okay, spiders, SPY is the S&P 500, okay? And it's a ETF. What does that mean? It means it's a liquid monkey, okay? That's what it means, a very liquid monkey. How liquid is it? This is probably the most marquee product. Nothing trades more than the spider on a day-to-day basis. Some days stuff will outpace it, but spiders are trading 3.3 million contracts today. Wretched lot, okay? What is something like Apple trade on a day-to-day basis? Here's Apple. Apple's probably good for, a million today. Well, it's only at 500,000 right now, but I'm just making a quick point. So we're going to trade the spiders. One of the other things, one of the other things I like about the spiders, I like this. Can the spiders be taken over? Do the spiders have a CEO? No. Can they be taken over? No, not really. Unless somebody's taking over the US, okay? Anything's possible these days. But if you look at the spiders, they're marquee. Nobody's taking them over. I think it makes it easier. Like, they're not one day going to be trading at 420 and the next day be trading at, 580. Like, that's not going to happen in one day. Can't. But let's get crazy. Let's actually go out here. And you can see I've got positions in here. Let's go out 80 days. Because I used an example earlier. I said it was 3 months. So let's go out 80 days. Let's find something that's trading about $1. Okay, let's do this. Here, is this trading about $1? It's 99 at $1. Is it close enough? In fact, sure, why not? Let's route one. Okay, when I say route one, all right, so I'm teeing it up. Okay, here's a market of 99, $1.01. I'm going to lay an order. By the way, if I put this in at $1, which is the mid price between 99 and $1.01, I will fill instantaneously. You want to see? Okay, watch. If I put this in at $1, it'll fill almost instantaneously, or they're going to change the market. What do you mean they're going to change the market? They're going to make this market 99 $1. Oh, see, I would have filled there already. Here, I'll tell you what, I'm going to put it in at $1.01. I'm going to put it in at $1.01. See? Filled. Okay, instantly filled. And if I wanted to, and I wanted to get out of that one, okay, I could come in here and just create an opposing order. All right. So by the way, I didn't even fill it at $1.01. I filled it at $1.02. You think I can go back and buy it back for $1? Huh? Yeah, you're like, no, because it moved already in price. So you can see now it's $1.04, $1.06. But just hang with me for a second on this one. You know what? I'll cancel it because I'm actually comfortable with that order. So I went out and just sold something for $1. Leave it alone. I'm actually going to draw this up here really quick. All right. So I'm going to go out, okay, all the way out to the July 15th. So here we are at the 15th of July, and I'm going to sell, what is that? The 474 calls, and I'm going to collect exactly $1. Yes, I collected $1 too, but whatever. Let's say I collected exactly $1. Now, time out. What happens after I do that? Everybody's doing something. I'm going to do nothing. I'm not talking about the risk mitigation yet, but I just want to give you a quick feel for this. So after I sold it, I'm going to sit there and I'm going to do nothing. Okay. I want to look at, like, if the market stayed flat. Now I know the market's not going to stay flat, but if the market did stay flat for 1 month, would I make money? Come on. This is this is where there's some back and forth over here. I don't want you guys to just sit at home. Got to play the TheoTrade at home game. If the market stayed flat for exactly 1 month, would I make money on this trade? 1 month, 1 month, 1 month, 1 month. Yes. Okay. Question is, would it be a lot? The answer is maybe. See, the thing is, when people learn about options, okay, everybody tries to convince you that great premium selling is short duration stuff. They could not be more misinformed. And you go, how could everybody be wrong? They're not everybody being wrong. Okay. A bunch of educators out there don't know what the hell they're doing. I mean, there's people that, like, literally, like, one day are, taxi cab driver, the very next day they're teaching people options. It's insane. The options skew has actually shifted to the sale of premium and back month options, which basically means, like, sell stuff with longer dated. Why? Because the decay is phenomenally quick. What I'm going to show you is the 80-day option, the 474 calls, is trading for $1. If I looked, okay, at the 52-day options, by the way, 80 days to 52 days, how many days is in there? That is less than 1 month. If I open this up, assuming the market stayed flat, if I open this up and I looked at the live market exactly 28 days from now and the market hadn't moved, and I look at the 474 calls, what are they worth? And the answer is 36 cents. So 28 days from now, I can go and I can buy the 474 calls and I can buy them back for 36 cents. What do I make? Roughly speaking, roughly, by the way, I even nicked myself by 2 cents over here. So including commissions, I can roughly make 64 cents or, okay, over 60%. You're making over 60% in less than 30 days with not taking very much risk, are we? Think about that. The decay out here is phenomenally large. And people constantly look at this, they go, holy crap, that's ridiculous, okay? And again, people look at it immediately, somebody says, well, I can't even feed my dog. I love that, by the way, that's a great comment. I can't even feed my dog on that one. Could you feed your dog if you went out and sold a bunch of little crap and scattered it everywhere? Like this is a small position, making $150 a day. That's theta. That's my theta. It's $150 a day. Maybe Fido is a hungry little animal, but that's a small position. What happens if I amplified that position? I could be making $1,000 a day, okay? These spiders are not the only place you can do this. And by the way, people immediately go, well, if I can do it there, like selling short dated options is the worst thing you can do, especially in volatility. The volatility, okay, and the skew lives in the back month. I'm just going to explain it in the most common terms I possibly can. If you look at short dated options, they have decent volatility, but nobody is looking at what's termed skew. The skew out here, okay, the skew is phenomenally large. That skew, okay, is in large part why we're making money. And what happens is the skew itself is coming in. It's what Ultima really is. I can even go, let's get crazy. Let's go 115 days out. Like we're in the nosebleed seats 115 days out. And 115 days out, okay, I'll come all the way out here. Again, I'm just looking for something trading at $1, so forgive me. Look at these 488s, or let's get even crazier. Like here's the 490s. They're trading for 92 cents, the 490s, you know, or I could use, I don't care here. These are trading for $1. You go, Fido is hungry. Boy, seriously, man, that's like one of the best comments I've heard in like a long time. Fido. So I sell something for about $1. And I, by the way, I'm just always like averaging right into $1, the 488s. And then like what, 35 days later, what are those 488s trading for? 48s, 488, look at that, okay? I would make just over 60% on those 488s. Apologize, I highlighted the wrong one. The 488s are making just over, okay? They're making almost 70%. And you're like, that's insane. How come more people aren't doing it? Because the professional trading world is, first of all, a lot of people don't know how to do this. Secondly, a lot of people don't know how to sell the option premium and not eat up extraordinary amounts of margin. Everybody can do this right now, but there's a little bit more to it. And that's what Ultima happens to be. But again, when you can make 50, 60, 70%, okay, it can really add up in a very, very short period of time. So that is just some of the basics of this. We have to learn how to go further out in time to sell premium, okay? Everybody says, well, why sell options so far out in time? Because we're not holding the option. I'm not asking you if I sell something with 115 days, you don't hold it for 115 days. You hold it for 30 days. You get in, you get out, you get on with your life, okay? So you can go out there and like, here, I'll just show you like this marketplace, just give you an idea of how quick things are moving around right now. Like I just sold something that had 80 days, right? 80 days, 80 days, 80 days. And what did I sell? Okay, what did I sell? The 474s. So I sold these 474s. Apparently I had another position in here as well. These 474s, like, look, if I didn't want those right now, I just buy them back for, you know, even more than I sold them for what? Okay, sold them for $1.02. Right this second, I can buy them back for about 97 cents. Okay, I'll leave it on though. I'm totally comfortable with that. So it's good. It fits my position very, very nicely. Okay, now to move on a little bit. People always go, why sell so far out in time? I don't want to wait 90 days. Couldn't be further from the truth. I'm in, I'm out 25, 30 days. The average time frame of a trade is under 30 days. The average time frame for my trade is under 30 days. Options are a vehicle. Just because I want to sell options premium, you don't sell something that has 30 days to expiration. Expiration will be the death of you. It really will, because expiration, either you or the option are going down. And a lot of times you'll go down in that one. But that's why people are, tuning into this webcast. Typically, these traders sell short duration options. I'm telling you, that's not where the edge is. The edge lives further out in time. That is what we do here at TheoTrade. TheoTrade is a group, predominantly of quantitative traders. And we sit here and we look for different ways to exploit markets for what they are. And not enough on the retail side. I say not enough. Nobody's looking at the back month options and screaming about, hey, sell these over here. That's what we do here at TheoTrade. It's criteria. It's the specifics behind it. Anybody can teach you how to sell an option. Like you can Google right now, how do you sell an option? Okay. Anybody can teach you to sell an option. Or they teach you the right options to sell. So they keep you out of risk, because that's what we really have to get to. Right. And by the way, you never have to own the underlying. Okay. I don't want to own the underlying. Like, as I said, you can do this. And I don't mind showing you guys, look, here's a position. I'm going to close up the spider position for a second. Okay. I'm just going to bring up one simple position in here. Okay. I want you to see a position. I'm tying up $700 in margin. Forget about the spider position. The spider position is a mighty, mighty large position. This little position over here ties up $774 in margin. And it's in an IRA, which is double the margin in an IRA. That is a position I'm doing in my retirement account. So I can't stand I don't have the capital. I don't have this. I don't have that. Okay. Don't put yourself in a deficit. Like, learn to do it. Want to know the dark side of this? 90% probability in the 10% hammer. So 90% sounds great, but what happens the other 10% of the time? And I like to focus on that, because what you have to understand in this business, first, we here at TheoTrade have to teach you the correct options to sell. No question about it. We need to teach you the correct options to sell. We need to teach you where to sell them. We need to teach you which accounts to do them in. Should I do it in a margin account? Should I do it in an IRA account? Both of those work beautifully. Okay. But then you need to learn the single most important lesson: how not to get hammered. Because 90% sounds great, but 10% of the time the market rips your face off. And when you trade high probability strategies and you're wrong, you get hammered. Listen, some of you that are joining us live right now have done this in the past. How many people here have ever traded an iron condor? Again, iron condor. Anybody? Yes. Y for yes, N for no. And again, we have a lot of people in here, but it's a very quiet group. An iron condor, okay? And what an iron condor is, you sell an out of the money call, you sell an out of the money put, you buy an out of the money call, and you buy an out of the money put. Like, I feel like there's like an iron condor dance. Anyway, the risk graph looks something like this. Okay, right? That's the risk graph. You do an iron condor. Iron condors are often very high probability trades. And I'm going to tell you the plight of the iron condor trader. You're going to go out and you're going to learn that you took some class, you paid $500 for the class, and the class taught you to do an iron condor. Okay, I'm telling you, listen, the buck again stops here. From year 2000 to 2015, I ran education for thinkorswim and TD Ameritrade. Like, I've seen every education company out there. I've seen them, like, like, when you're behind the desk of like a brokerage firm and you're watching other educators, you're like, oh, please don't teach them that. But you can't outright say that because they're clients of yours, right? But here's what happens to people that do iron condors. Iron condors are these really, really high probability trades. They're like usually 90%. And you take a class, you pay $500 and you go out and you learn to do the iron condor and you do it. And the very first time you do the iron condor, hot damn, it works. And you did one contract iron condor in the spiders and you're like, yeah, I did it. And you're like so shocked that you actually made money. It's pretty ironic because the trade is a 90%. Anyway, you go out the very next month and you do the exact same iron condor and you do it again in the spiders. But this time you do 5 contracts because the first month you did 1 contract, it worked. Second month, you do 5 contracts, and lo and behold, it worked. You're a genius at this point. And the third month, you go out and do the exact same iron condor, but this time you don't use the spiders, because now you've had 2 months of profitability in a row. You're squawking your feathers. Now you do it in the SPX. What is the SPX? It's the mother of all products. It's where people go, okay, to, die peacefully, but you go and you do it with 1 contract in the SPX. Third month in a row, you made money. By the way, the SPX is exactly 10 times the size of the spiders. So 1 contract in the SPX is the equivalency of 10 contracts in the spiders. And you did it in the 3rd month in a row, you made money. Now, it never really resonated with you that you're doing a trade that is a 90% probability. Like, people don't think about that. You should have made money at least 3-4 months in a row, right? So through the 3rd month, you made money. On the 4th month, you're like, that's it, baby. I'm the next Buffett. Bring it, okay? You're already buying the new Tesla and ordering it online. Only cost you $250 for the deposit. So you've already put down the deposit on the new Tesla. And on the 4th month, you step into the SPX and you do a 10 contract trade. 10 contract trade. 3 months ago, you were captain 1 lot, jumping around in the spiders with a little cape on. Now you're doing 10 contracts in the SPX. Are you out of your mind? That's 100 contracts equivalency inside of the spiders. Anyway, you go out and put the 10 contracts on in the SPX, and the market's like, come on, come on. As soon as you execute the trade, things get a little volatile, get a little crazy. It's like the marketplace saw you come and screamed, we got one. The market allowed you to make money 4, maybe even 5 months in a row before it literally moved huge, took half your account. Happens every single time. How many times I've watched this? I mean, the market is evil. It's like this entity that's just drawing you in. Come on, little more contract size, little more, and then boom, train wreck. Your losses are going to exceed the gains of the previous 3 trades, take half your account. And anybody that's ever traded iron condors will tell you, holy crap, that's exactly what happened to me, okay? And then that's when they usually say, holy crap, it's like I can see your, like I could see your account. I could. Like, there's nothing that you're going to say that's ever going to surprise me. Like, it's, I've seen the most horrific things, okay? I was in Chicago during all of 2008, okay? To the point you were like, oh, this is getting ugly. Listen, okay? You have to learn how to do this correctly. The 90% probability and the 10% hammer. So after all of this transpires and after you go through this, I'm going to tell you exactly what happens, okay? I can tell you exactly. By the way, I like what somebody said in here. It happens to hedge funds too. Yeah, the ones that they get so used to not managing risk. Do you realize, I'm going to tell you something interesting about hedge funds. Do you realize the last time the hedge funds really had to really manage risk? Yeah, a little in 2020, maybe a little bit in 2018, but the last time they went through like something serious, you got to come out of the financial crisis. You got to go back to like 2011. It's getting real now, isn't it? You have an entire generation, okay, of millennials that are trading at the hedge funds that have actually never been really heavily involved in what? In risk management. What do? They go, Jerome, save me. I'm talking about Jerome Powell. Anyway, after you go through this sequence of events, then people think to themselves, I can fix it. You take another class for another $500 and you learn to fix something. By the way, 15 years in the brokerage business, fix is a very dirty word. I don't like it. I don't have to like it. I don't want to like it. I'm such a cynic when it comes to like fixing good trades gone bad. People, fixing a good trade like gone bad, you're basically just taking a shovel and getting out. Like, there is no way to fix a trade without chasing crappy trade with more good capital. It's impossible. If you think about fixing a trade, the very notion of fixing a trade, what does it do? More risk, more transaction costs. You go, I trade with Robinhood, it's free. Ain't nothing free in this business, let me tell you that right now, okay? But there's no way to fix anything without racking up, okay? More costs. Yes, some fixes might work, but the notion of fixing a trade throws good capital after bad. It's like one of the first things they teach you at a trading firm. Don't go chasing bad trades. You're going to go chasing a new job. That's what they would literally say. Fixing is like taking a car, driving it off a cliff, preferably you're not in it. Take a car, drive it off a cliff, and then bring it to a body shop. What are they going to tell you? They're like, that's a nice piece of crap, right? I'm going to tell you the same thing about your trade. Listen, fixing doesn't work. All right, it just doesn't work. You need to learn to do this the right way. You have to structure the position properly from the get-go. Now we're going to get into it. Now I'm actually going to show you a little bit of what kind of like, the full Monty. When somebody earlier, and I'm still cracking up about that one, they're like, 50 cents, man. I can't even feed my dog off 50 cents. I do appreciate that stuff. By the way, the other thing is, believe me, I read every single comment in here. If you haven't picked up on that, every single comment, okay? Why? I can walk, talk, chew gum all at the same time. I find it amusing. And believe me, I'm watching markets very carefully out of the corner of my eye. So what we're gonna do, okay, is, and what trading really becomes, because you wanna learn this business. And I really mean that. Like, do you want to learn this business? There has to be a little bit of commitment on your behalf. What I'm about to explain is going to look like a lot of stuff on the screen really quick, okay? But it's actually pretty simple. What I want to teach you is inventory management, which is really simplistically like inventory management. What inventory management is, you want to think of yourself, okay, when selling options premium, you want to be the Amazon of premium selling, okay? You want to go out, you want to sell products, you want to buy them back dirt cheap, you want to just keep that inventory going, okay? So we talk about 50 cents, but 50 cents, 50 cents, 50 cents, 50 cents, 50 cents, 50 cents. Like, how many times can you do that? I don't know, you want to see? Okay, how many times can I do that? Like, what do I trade a lot of? Let's go into my account, okay? What do I trade a lot of? This year I've actually been heavy in bonds. Now, a lot of you have no idea what bonds are. When I say heavy in bonds, okay, just in the last 120 days, and by the way, I'm going to highlight because I like to show, as I say, like the full Monty. I will show you everything about P&L in my entire account. This is the last 120 days, period. That's 120 days. This is just bonds. Why bonds? It doesn't matter why bonds. Actually, I'll tell you why bonds, because interest rates have been rocking. And I just, the volatility in bonds, vol is sky high in bonds. So I've been doing some bond trades. How much? I've only done 17 trades in here. But each one of the trades, let's say each one of the bond trades was averaging like $300 of profit. So all of a sudden you're like 3 times 17, you're like, okay, but that's only one of the things I'm trading. But like, what does this look like? Look, I'll tell you, look, I sell to open, I buy to close. I open to open to open, to close, to close, to close. To open to open to open, to close, to close. To open to open, to close, to close. That's it. You sell something for 13, you buy it back for 6. You sell something for 13, you buy it back for 6. You sell something for 17, you buy it back for 8. I'm just matching them up over here. Look, these are the 138s. Sold them for 10, okay? Over here, by the way, so I apologize, that's a close, okay? I sold over, here's the 138s. I sold them for what? Okay, you know what? 17 ticks, buy it back for 5. And that's it. I just wanted to show you something like how this stuff works, okay? So what I'm going to do is show you a little bit about what inventory management really is, okay? So let's talk about the SPY. So, whoops, my pen is getting wide again. So let's talk about something like SPY. And the SPY is at 420 bucks, okay? 420. I'm going to go out, and again, I'm just going to sketch this up for you because I want you to understand what inventory management means. I'm going to go out. Let's get crazy. Okay, let's sell the 474 call like I did a moment ago, collect $1. And then I'll be able to go out and sell pretty soon if we were to rally, I don't know, maybe the 480 calls and collect $1. And maybe I'm selling, okay, sell the 500s and collect another $1. Simultaneously, I'm out here selling puts. Which puts am I going to sell? Let's get crazy with it. Let's go out and sell 300 puts. By the way, puts are going to be trading for double the calls. I'll show you in a moment. If I sell those puts, I'll collect at least $2. Maybe I'm selling like, the 320 puts. That's $100 out of the money. Collecting another $2. Maybe I'm selling, okay, I don't know. Let's get really crazy with it. Like the 315 puts, collect $1.80. All I'm making a point with, and I know that this is sloppy as can be, like, I just want to make a quick point. Here we are at 420, okay? I'm selling stuff that's way out here, okay? I'm going to sell some out of the money calls, and I'm going to sell some out of the money puts. Then what I'm going to do, I'm going to get back, I'm going to get under the desk and just hope that nothing goes wrong. Wrong, you can't do that. because it's only a matter of time. What will the market eventually do to you? Could be today. What will the marketplace eventually do to you if you sell all of this? And again, I know this is a mess, but I'm selling the 315s and I'm selling the 300s and I'm selling the 320s. And again, this is where people go, is that going to make me enough money? I want you to go look at the puts. Okay, we're going to go into the spiders. I'm serious, man. Let's go into the spiders. Let's go into the spiders. Let's go. Let's get crazy. Let's go even 115 days out. Just make a quick point. Look at all the premium out here. Holy smoke. Do you realize that's the 290 strike? The market would have to sell off like 25%. It's over 25% from where it presently is. The market would have to barf for you to really get killed on that. 290 puts trading for 260. That's even better than I thought it was going to be. Okay. Go out like 80 days. Get crazy with it. All right. Look at this. Obviously, I'm doing this. I've got positions out here. Okay. Look at these 310s. Just what I was saying. The 310s, the 300s, they're all trading for right around $2. Just bear with me on this thought. So I'm selling all these out of the money puts and selling all the out of the money calls. And what am I doing? I'm buying them back and making money and buying them back and making money and just churning through the inventory. But what will eventually happen to you? Okay. I'm going to tell you what's eventually going to happen to you. You're going to wake up one day and the market isn't going to be here. It's going to be right here and it's going to jump down. Okay. And what are you? You go, I'm in trouble. Oh, hold me. You wake up in the middle of the night one day and you're going to see a market that goes limit down. Limit down means it crashes. Limit down is a 7% move overnight. It's 7% now. They changed the rules. Anyway, limit down, you get absolutely smoked. You cannot do it. And people go, well, how then do you manage risk? That's exactly what we're going to talk about. The single most important thing, okay? The single most important thing, and I am just going to beat you up about this. Risk management. Inventory management is one thing, but you got to warehouse that inventory. You got to understand you must build a construct, because what happens if the proverbial crap hits the fan, which possibly happening as we speak, okay? What is going to happen to you? You can't get caught in that kind of crossfire. What you're going to learn, okay, and what we do here at TheoTrade, okay, is vastly different, all right? We use hedges. What kind of hedges? They're preemptive hedges. Enter, okay, the hedges. What are the hedges? They're always on. They are risk mitigation tactics, right? There are three primary hedges we use. Make sure you guys see this. There are three primary hedges we use. The first one is often known as what we term a risk twist spread, okay, better known as RTS. The second hedge in here, okay, the second hedge is a VIX vol spread, better known as a VVS. And the third one is a gamma iron. What these three trades happen to represent, okay, are your risk mitigation tools. And immediately, as soon as I bring them up there, I go, is this going to cost me a lot of money? Because I don't want to pay a lot of money for the hedges. You got to warehouse your inventory. You got to have a structural form around the inventory. Otherwise, you're just going out there and you're naked in the marketplace. And don't you dare worry about margin, because we're going to take care of the margin. We know how to mitigate the margin risk. What you have to learn, though, is enter the hedges. You cannot survive without a hedge, for it is only a matter of time. It's only a matter of time, okay, where the hedges come into play. And somebody was asking about the type of hedge, okay? Yes, I'm actually using an inflection point spread, IPS trade right now, which is a version of this. But the best way to understand a hedge, you know, the best way to understand is a VIX volatility spread. Now, for those of you, okay, remember this earlier, the VIX is the S&P 500 volatility index. When the market goes down, the VIX predominantly goes where? Up through the roof, okay? When the market goes down, the VIX goes up. Why? Because volatility rages when the markets crash. Look today. I bet you anything, you know, I don't have to depart too far from this, but look today where the volatility happens to be. See on my left-hand bar, okay? Where's VIX? You're like, oh, I can't really see it here. I'll just highlight it for you for a second. VIX is up, holy smoke, okay? It's up only 16%. The market tanks, volatility rips. Look at volatility in the last 3 trading sessions, right? It was down here. That was Friday, okay? Welcome to today. That's a pretty scary thought. So if the market goes down, the VIX explodes. What we're going to do is we're going to put on a very, very minute, cost-effective trade in VIX. That little tiny trade that if the market does crash, explodes in value. And that explosion in value covers the risk of the other trades. So now, knowing people are always going to ask, well, when do I put the VIX trade on? You have to always have some type of a hedge on, okay? You know, why do people go out there and buy insurance in a house? I'm going to time when it burns down. I don't think you are, okay? I really don't. I don't think you can time the burning down of the house. I don't think you can time the burning down of a marketplace. I mean, today is just as likely as any other day. Watch. Here's the SPY. And the SPY is at 420. And we're going to go out and we're going to sell, okay? The 470 calls collect the buck. We're going to go out and we're going to sell, okay? The 475 calls probably collect another $1. And again, I'm doing this over time, not doing it all in one day. We're going to sell, for instance, the 500 call even further out in time, collect another $1. Building a little inventory, maybe a little more out there. Subsequently, we're also going to go out and we're going to get really crazy with this. I'm going to sell, for instance, okay, the 310 put, collect $2. I'll be selling over here the 300 put, collect $2. I'll even be selling even further out in time the 290 put, collect another $2. Okay, here's my inventory. Now, my inventory doesn't have to be 6 trades. My inventory could be hundreds of trades if I so choose. It seems complicated, but all you want to do is just look at the inventory and burn through it. Who cares how much is on, right? Like if you go out there and you wanted to sell apples, actual apples, okay, what do you want to do? As much inventory as you possibly can. Why? Because there's only one apple at a time. That's when somebody was like, 50 cents. Well, how about every single apple that you sold? You have edge of 50 cents on. How many apples would you want to burn through? As many as you possibly could. As many as your account's ever going to let you. But you have to actually have that hedge on. And what you're going to do, and I'm just going to use an explanation here, okay? This is what selling options premium is about. And just very carefully watch, okay? Because you're not going to get away doing this for nothing. Right here, you're going to lay a VIX vol spread. Why are you going to lay a VIX vol spread right down here? Just in case. Because one day, this marketplace is going to come crashing down. If the marketplace comes crashing down, the VIX vol spread is going to explode in value. And what it's going to do, it's like an umbrella that'll just, poof, it'll pop up and it'll let you exit, okay, positions. Is it going to save you all the risk? Absolutely not. You don't need to save everything. You've been collecting premium sometimes for years. We haven't had a wicked crash since COVID, okay? That's been it. Since COVID, it's been gravy. I'll show you my exact positions here. But this, okay, is a necessity. And what happens to the upside? Well, to the upside, actually, we have a trade right over here, upside hedge, and this is what we call a gamma iron. If we explode to the upside, you have to actually make money in the gamma iron, which actually covers a lot of the risk of the calls you're selling. Again, we are defining that risk by using a number of hedges. We are defining that risk by using a number of hedges. And you never want to let things get out of control because markets are going to move faster. If you say like, oh, I'm going to use a stop order, you can't use a stop order. Market crashed overnight. You wake up, you're done. You can't do that. You have to use something definitive. It's one of the biggest mistakes I watched for 15 years. I watched from the other side of thinkorswim where people just blew themselves up. Oh, the market crashes, it's over. Oh, the market crashes, it's over. Okay, it's not over. Manage your inventory. This is what selling options premium is about, okay? It's the only way to build and construct an inventory that's going to work for you. And again, I love to use that term inventory. And people look at this, they go, oh, this might be a little complicated. It's not. I don't even know what all this crap is on here. Let me tell you what it is. P&L. Want to see what it is? Okay. As I said, this is no holds barred. That's P&L. That's one account today. It's up 13 grand, right? To make it a little bit more fair, let's actually aggregate all accounts in here. This is just the accounts on thinkorswim, okay? Here you go. I'm up just shy of 18 grand. And of course, everybody goes, well, how much capital are you using? Screw it. Let's just go for it. There's a total of $350,000 in here. I don't want you to think, oh, I'm making $1 million. I don't keep more than 250 in one of the accounts. The other account's actually an IRA. I don't keep more than 250 in the accounts. See what's going on in the account? Positive growth. That's all you ask for. I'm picking up, a little bit of premium here, a little bit of premium there. I don't mind showing anybody, and I'll tell you right now, the account that I'm showing you right here, that's up some 13 grand, okay? That account, after I get just about at 300,000, I'll sweep it and knock it back down to 250. I don't have to keep more than $250,000. That's a big account. That's all you're ever going to need. I can't stand when people are like, I got $5 million in my account. Who cares? Yay, it doesn't make a difference. Okay, you do a lot of damage. When you're getting P&L of over almost $20,000, okay, on an account, and I'm going to tell you right now, you can have a minuscule account. You go, what happens if minuscule account? This is an absolute, okay, minuscule account. It still has a P&L from the open of $362, okay? I only have $774 tied up. I only have $774 tied up in my P&L. That ain't half bad. Just want to show you that. And again, everybody, well, how have you done on the year? Everything is in here. People, no holds barred. You want to see how you do in the year? Here you go. Overall totals in a year. I have not had more than $250,000 in this account up until like basically right now, okay? Net, the count's up of $111,000, okay? And again, I'll continue to sweep capital out of it. So everybody asks about returns. The other thing I always show you, I will show you every single trade that I've done for Ultima, okay? All of last year up to this point. But this is why you want to sell premium. Premium can be sold in small accounts, even if you have under $5,000. You have $2,000. $2,000 in a margin account, $5,000 in an IRA. Produces positive decay, can actually enhance existing positions. If you own stock, you can actually learn this around your stock positions, but you need not own stock. You never have to buy or sell the stock. Provides an incredibly high probability of success. You got to realize that most of the time, okay, you just basically sit there and do nothing. By the way, I don't sweep money every single month, okay? I sweep it out usually when the account gets to 300 and I knock 50 grand off, okay? And there's actually a really specific reason, because I'm managing, pretty good amounts of capital. I sweep it off, tuck it into another account. You could be wrong on market direction, still produce profitable trades. So again, it's not about being right. And I'm just telling you, for this marketplace that you're going to be in for the foreseeable future, you need this in your life. You got to realize at this point, we're not going back to all-time highs. The Fed's going to raise interest rates. Things are about to get rough. Okay, we'll be lucky to squeak by without a severe recession at this point. Okay, you need to do something other than buy and hold. This is not going to be a stock picker's market. When I say it's not going to be a stock picker's market, what does that mean? Right? Here is the S&P 100. Okay, I just want to make a point. This is the S&P 100. You think this is a stock picker's market? Where are you going to go? Where are you going to go? Huh? You're going to pick one of the 14 stocks that's up today? Look how minuscule they're up. What's this? It's probably GE. I saw GE down huge earlier today, but I'm just making a quick point. Is there's nowhere to run to. There's GE. Okay, what's that? Tesla. Okay, nowhere to run to, nowhere to hide. It's imperative that you're going to have to learn something. And again, I don't want to hedge around that. You do have to learn something. Listen, selling premium can potentially bring in consistent returns while minimizing your risk. This, okay, the selling premium part is easy, but you got to learn the criteria. The criteria is the specifics. It's the nuances, how to structure the positions. Before I go any further, okay, I'm going to show you live trading examples. Variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account. And this can be now done inside of IRA accounts. All I want to show you here, okay, and I promise you I'm going to rip through this. Okay, I know we're on slide 35. I probably have 150 trades. I felt the best way to display results of these trades were to show you every trade. What I have now done is I've updated I started a portfolio called Ultima in the beginning, here it is, in the beginning of 2021. I will show you every individual trade, okay, that was done inside of that portfolio. Everything. Again, this is like totally no holds barred approach. And I'm adamant about that because, you know, nobody ever gets on a live webinar and says like, hey, take a look at my positions. Okay, hey, you know what? Today I'm up 13 grand. Maybe tomorrow I'll take a $5,000 hit. It's cool. I'm fine with it. Okay. It's about incremental like returns. It's about looking at this and saying, okay, we're at 271. Now we're at 281. That's a positive direction, isn't it? Not every day is an up day. Look, yesterday I actually lost about 3 grand, but today we're back, baby. Okay, Mortimer, we're back. Like that's what trading is about. There's going to be some ups, there's going to be some downs. You got to recognize that. But about incremental returns. What you're seeing right here, these are trade alerts. These are trades that not only I did, the trades were actually put into a portfolio and blasted to clientele of TheoTrade. You get to see everything. Again, it's no holds barred. What this is, okay, right when I say this, I mean this. Highlight this for a second. This is an opening trade, a closing trade. Tesla, okay, exactly what I traded, calls, opening and closing the return, okay? Where does this come from? Where does that come from? Well, that actually comes from here on thinkorswim. It's the account statement. When I say it's my account statement, what I did is I went back and I looked at all the trades to open to close, and I just matched them up one by one. So here we go. This is the beginning of 2021. Bonds short put. I trade bonds. Okay, obviously I trade a little Tesla, a little bonds, more bonds. Okay, sorry, IWM, Tesla, SPY. Okay, I'm just going to scroll through here really quick. You can see I'm already on slide 47, little QQQ. Okay, 64%, 53%, 57%, 56%. IWM short call. Okay, oh, 19% loss. It happens, people. Okay, by the way, this is an explosive move to the upside. And I want you to see that the average hold time is even less than a month. Here's one that's about a month. Okay, 62%, 49%. Again, this is inventory management. So all those little pieces of the puzzle, imagine I went out and sold a little here, sold a little there, did a little dance, made a little love, get down tonight. All I'm doing is just opening them, closing them, opening them, closing them, right? Opened on what, February 25th, closed on March 11th. That's pretty average, right? Opened for 209, closed for $1. Okay, open for 12 ticks, closed for 6 ticks. You know, look, open for 83 cents, closed for 38 cents. Is that a lot of money? No, but if you did it, a couple of times a day here, it's pretty good. Anyway, I'm just ripping through. Now, as I got people used to the portfolio, and I'm just kind of scrolling through returns over here, nothing is huge, right? You don't see any 80, 90% returns. You will later on, but everything right now is just inventory management. I'm churning through inventory. So once I get people comfortable with inventory management, then I'll start to actually ramp up what we're doing. There's Amazon, QQQ, a lot of Q trades, a lot of SPY short calls. Timeout. Now we actually moved into a bigger product. That's the S&P options on futures. The S&P options on futures is 5 times the size of spiders. So all of a sudden, one contract in here, this is where people go, making $1 sucks. Yeah, well now you're making $1 times 5. So every trade, it's real now. Just trade bigger products. So here we go. We're actually just scrolling through S&Ps. Now, once I get everybody comfortable and understanding, again, more about inventory management, I build them up into a bigger product. Like the QQQ, right? Not so big. Then we actually, we complicate things and do trades like Christmas trees. What's a Christmas tree spread? This is a premium selling strategy where I don't just go out and sell one contract. I can actually go out there and sell a boatload of them for $21 and buy them back, okay, for $3. It's an 85% return, okay? More QQQ, TLT, ES, SPY, ES, okay? And again, just going along over here, here's another Christmas tree spread, 92% return. Look at this. Put it on for a $22.43 credit. Closed it out for basically $1, okay? Credit on here, 92% return. It's huge. ES short put, ES. So here we are in December, okay? every single trade that I've done. Now, hold on, I just crossed into this year. So 54% return. This year, I've traded quite a bit of bonds. I showed you 17 trades just in the bonds. Here's an ES, 53%, ES, 51%, ES, 57%, bonds, 54%. Here's a SPY Christmas tree. I put this one in here very specifically. 1 unit of this trade produced $3,953 of profit. That's 1 unit. You could have done as many as 5 units of this trade. Okay, so 1 unit made basically 4 grand. 1 unit means 1 intact piece of the trade. It's actually opened as 1 trade, closed as 2 different trades. Okay, ES 53%, 50%, 55%, bond short put, ES short put, ES short put, bond short put, 53%, 51%. Okay, there's nothing crazy. Here's another SPY Christmas tree trade. This one I made only $1,000 on. Okay, bond short put. Here's another bond short put. By the way, this takes us literally to today. That trade was actually closed out this morning. In fact, the trade was, not only was it closed out this morning, I don't mind showing you guys. This is part of the inventory on here. You can actually see exactly what I filled today. So this is the call that we sold earlier. I haven't traded actively, not yet anyway. Let's see if the market breaks apart. But I bought back a short put, the 132 puts, and made over 50% on them. 62% return today. That takes us basically to even. And that's, again, you know, people always ask, how many contracts do you have to do to make, like, for instance, 5 grand? You'd be doing 1 lots, make 5 grand a month easily. 1 lots. Okay. I mean, look, making $150 a theta over here. I got nothing big on it. A couple 3 lots, a 5 lot. Okay. Look at this. It's a bunch of 1 lots in the S&P options and futures. It's pretty nominal. Nothing has to be big. You just learn how to, you know, trade bigger products. Listen, you don't have a lot of time. It's not a big problem. What I'm doing here today isn't hands-on. It's very hands-off. You can even use good till canceled orders to be able to exit it, right? So I wanted everybody to rationalize that you have to sit down. You actually have to learn, conceptually learn, like, which options to sell, which we explained to you, and then how to hedge that position, which we explained to you. From there, it's a matter of just going out and putting positions on, okay, periodically. We send you, okay, those trade alerts. I mean, that's what this is. It's a trade alert. That's why I just went through all of these. All of these are trade alerts, okay? It's a wonderful time to learn the skill set because, again, if you're still working, great, part-time, most people are working from home, and that's the point that I wanted to make on here. It's a great way to actually emerge a little stronger. You know, the pandemic doesn't concern me anymore. Rising interest rates is a concern. It is a hideous, okay, hideous environment for the markets. By the way, what our members are saying, here, I'll just read something more recent. This comes from Jim on February 10th. Bought 4 SPY contracts for 296, closed out earlier for 657. Could have waited. That's bitten me in the past. Okay. Kevin Gibson said TheoTrade is best by far. Okay. I've been with them for the rest of my trading career, no questions asked. All right. Characteristics of selling premium. The attributes of this are undeniable. So you're never buying or selling the stock. The risk can kind of be tailored to your comfort level. You're not ever going to use stop orders. You can vary time frames to help further minimize your risk. The probability of profitability is incredibly high. It's also, if you do have a stock portfolio, you can actually wrap what I'm teaching around a stock portfolio. You need not have stock. It's an excellent tool for those seeking returns to build a smaller account. Again, you do have to have $2,000 in the account, but new products allow for the sale of options in nearly any account size, okay? What you gotta learn is building a portfolio of options, but do not let the options portion of this intimidate you. Like, the sale of premium, again, can be done for minimal credits and minimal risk, but the sale of premium, it's the same thing as like this massive power saw. You know, I've used the exact same analogy for, like, literally for 20 years in talking about options. And the analogy is this: if you wanted to go out and you wanted to cut down a tree, you could use a handsaw, but it'd probably take you half the day. And it's dangerous actually to use the handsaw to cut down a tree. But instead, you'd probably rather use some type of chainsaw, a power saw, right? Use a chainsaw, it's going to be quick, fast, probably safer way. But if you don't know how to use the chainsaw properly, okay, you can, you know, lop off a couple of fingers and kill yourself with that thing. Options really are the exact same thing. Options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in the markets. But if you don't know how to use options properly, you're going to lop off a couple of fingers. The key to this is the risk mitigation, right? You can sell Ultima Premium. You got to learn how to minimize the risk. Again, don't let the options portion of it intimidate you, because the one thing, and I don't say this to intimidate people, but I say it because it's the reality. You have to understand that in this business, you really want to learn the business, you're going to need strategies like this for the foreseeable future. Buy and hold, it's done right now. It's done. You're going to have possibly a lost 5 years, a lost decade. I do not know. I don't know what the Fed's going to do. You don't know what the Fed's going to do. They're going to raise interest rates. Yeah. And then they're going to realize, oh, we've done damage. And they're going to lower interest rates. But it may be too late at that point. This is not going to be a stock picker's market anymore. I mean, you just saw one of the best lose. How much in Netflix? $500 million in Netflix was lost in 3 months. That's Bill Ackman. Congratulations. Okay. It's impossible to be a stock picker's market at this point. You got, people going out and buying companies, taking them private right now. And the stock didn't even move up that much. Again, you're going to need these strategies for the foreseeable future. We can show you how and when to sell premium in a matter of a couple of hours, right? There's going to be some work to it though. We create detailed recipes for every strategy, including selling premium. It's the same thing, like you wouldn't bake a cake without a recipe. Why trade without one? Okay. We have highly structured recipe books that we actually build to prepare you to be able to sell premium. This is what you need to know to successfully sell Ultimate Premium for a living. You got to know what underlying stocks or indices make the best Ultimate Premium selling candidates. Now you saw my positions. Okay. In fact, you can see every single product that I've traded in here. Like look under my profits and loss, you can see every single product that I've traded. I don't hide it from anybody. Look, for better, for worse. This is the year-to-date profit and loss in every single product that I've traded. Not every one is positive, people. Apparently I've lost a little money in Robinhood. I love that one, okay? I've lost some money also apparently in the energy sector. But the bottom line is you can see every single product that I've traded. I don't hold that back from anybody. But you know what the reality is? You have to know exactly what volatility to seek out. Certain products, like the energy sector, in favor, out of favor. Would I want to do this in Tesla? Maybe. Sometimes it's got too much volatility, sometimes not enough volatility. You got to know, it's got to be in that perfect volatility range to be able to do this for Ultima. What options expiration do I select? Have you looked lately at an options chain? I just want to make a quick point. Look over here with me at the SPX. Look at the SPX. Look at it. 1, 2, 3, 4, 5, 6. Look how many options expirations there are in the SPX. I mean, this is the mother of all products. There's like, there's like 50 different options expirations in here. How about if I tell you this? You got to narrow it down. There's only 3 expirations that you can even bother looking at, right? So there's a lot of expirations. There's a lot of mistakes that are made on this. What's the delta of the option that I sell be? What delta? What do you mean? What's delta? Delta, the rate of change of the option for every dollar movement in the stock. Forget about that definition. Delta is actually going to key into what probability. In fact, what options do I actually buy against the position? How do I hedge it? How do I build the position? Meaning, like I showed this cool risk graph a little while ago, right? I showed this, like, this distribution curve, because I look at the market and I go, we'll sell a couple here and we'll sell a couple here. I'm going to buy a hedge here, maybe buy a hedge here. We're all going to be happy. How do you build the position? Okay, you have to learn how to do that. That's the part where we come in. Okay, do I need a large amount of capital in my account to do this? Of course not. I've been harping on that all day because people get all hopped up and they go, hey, I need to. Okay, what do you need to do? You don't need $2,000 in your account. It's fine. What's the right amount of risk for you? Depending upon account size, we can actually dial in the right amount of risk. Okay, what are the percentage returns supposed to be? What was the most frequent percentage return that you saw on that screen? Okay, what was the most frequent percentage return that you saw? Anybody? 50%. Yeah, I don't mind saying that. Right? But we're going to actually have to get you there. 50% returns, pretty common over there. Right? How do I protect myself from market crashes? VIX volatility spreads. You're also going to learn one called the inflection point spread. Ooh, if there's a class to view now and there's something you want to do, you want to use inflection point spreads. okay? Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Trading is all about answering the what ifs. What might be a good stock or ETF candidate to sell premium? What's the correct options expiration cycle? How much capital do I commit to generating premium? What strike price options do I sell? What strike price options do I buy? How can I limit my risk? We have those answers. What we do here at TheoTrade is we build recipes with definitive criteria. They're checklists for each strategy and each unique variable you're going to encounter. To give you some specifics on this, when I talk about checklists, here's the logic behind it. If you're going to go and you're going to fly a 737, the pilot doesn't just hop in the aircraft, turn a key and throttle up. Let's go, baby! Throttle up. It doesn't happen. They actually go through a really definitive checklist. And then once they've gone through the checklist, okay, then and only then are they ready to execute. After they get up in the air, I would say that 95% of the time, nothing happens to that aircraft. They're bored out of their minds, okay? They're in there playing games in their iPad, just little dial here, little dial there. Trading is no different. The 5% of the time, things get crazy. I'll tell you what, when things get crazy, refer to the checklist. Why? Because in that checklist, okay, TheoTrade becomes the answer to your questions. We'll give you the right probability for the trade. How many option contracts for the account size? When do you close the premium sell? What if we sell off big? Do you bail out of the trade? What if we rally massively? Can I fix losing positions? We have to be able to answer, not just be able to get you into the trade, but then you got to actually do stuff on the fly. It's the how, it's the when, it's the why, it's at what price. And I'm telling you, it is just the beginning, people, of the variables that you're going to face while selling Ultima Premium for a living. You can read what selling Ultima Premium is. Maybe even how to build a few trades already, or you've sold some premium. But I'm telling you, you need TheoTrade's recipe for success. People go out there all the time and you can Google what to sell, premium is, okay? Google's not going to give you the criteria. Google's not going to give you the specifics. Google's not going to give you, what do you do if we go up, if we go down? Okay, how do you actually put on a VIX volatility spread? What's this inflection point spread? 20+ year trading experience. That's just me. Access to client order flow for 15 years. Okay, viewed and studied millions of trading accounts and ran education at 15 years for thinkorswim and TD Ameritrade. Okay, that's where a lot of the criteria comes from, and criteria is the recipe for success. The following strategy, which is Ultima Premium, and the corresponding criteria requires the utmost attention to detail. And we've spent years fine-tuning Ultima, years. When you approach the section on criteria, you follow the steps to build the trade. We built a 5-hour course, okay, for Ultima income generation. This is where people tune in and they go, oh, it's $500. It's not. Hang with me for a minute, because I'm going to explain a lot about what we do here at TheoTrade. One of the first things I tell you before even explaining what the class is, the Ultimate Income Generator course, it's another class. It's not another class, okay? It's everything that you're going to need, soup, okay, to nuts, for getting involved in this business. We'll give you everything you need from absolute novice to the most extreme traders. We even actually send out trades to you. It's all incorporated in here. There's nothing you're ever going to need beyond what we actually present here, okay, today. Yes, this is a 5-hour course. Yes, it's Ultimate Income Generation. However, we are going to hold your hand. We don't allow people to come through here, take a class, then give them a pat on the butt and say, go ahead, do it, okay? We actually take you, then hold you by the hand and say, hey, if you're not comfortable with your own trades, follow ours. That's okay. Now that's up to you. It's a self-directed account. You can follow our trades, okay? We've had a really great track record. It's not being like, hey, could we ever take some losses? Of course, it's par for the course. It's part of the business, okay? But we're in here not only trading for ourselves, not only showing you, again, every day we show everything we do in the accounts, for better or for worse, okay? And I really mean that, for better, for worse. You're up 13, now you're only up 12, okay? It's again, that's what we do here. We trade, and we trade with you. We show you everything. So let me explain about Ultima, but then I want to come down to the nuts and bolts, that this is not a class for $500, that everything you're going to need to support yourself in getting involved, okay, in this business is in part of TheoTrade. It's all part of TheoTrade. What we do here at TheoTrade is all encompassing. Anyway, we have a 5-hour course, okay? It's archived. When I say archived, it's ready to go. It's like on demand, just like Netflix, and available immediately for streaming with 24/7 access. You can even have download capabilities. When I say download capabilities, we have our own mobile application. So any device, whether it's Android, whether it's iPhone, we have our own mobile application, and you can actually get into the application, download it, watch it at your leisure. You can do it on an iPad. You can do it on any tablet you want. The class slide deck. There's a slide deck that comes to class. Okay, it includes all of the checklist, the entry and exit criteria. You can download it immediately, right? But what I want to explain to you is, again, this. And we've seen all these classes over the years. And again, for since 2000, I've been out teaching this stuff. Seen people sell sell something for 500 bucks, and you have to buy an indicator for 500 bucks that goes with the class. Before you know it, you got to take a class to learn how to use the indicator for the initial class, and all of it's obsolete. You got to take another class. Okay, that's not what we do here. What we do here at TheoTrade is, again, we provide you trades, we provide you support. When I say support, how about you can email me? Me, not just email us. You can email me specifically. I'll respond to the emails, right? We're approaching close to 6,000 clientele. It's okay. Some people just come to TheoTrade just to be able to bounce ideas. Like, it's not like you're going to call up Charles Schwab anymore and be like, hey, Chuck, am I setting up this premium sale right? Like, nobody's even going to pick up the phone these days. That's that crazy. So you can bounce ideas off of this. Wait, I encourage people to do that. And a lot of education firms, they're scared of, real trades. Is this a hypothetical? Okay. Forget all that. I've held every license imaginable in the brokerage business. I've held a Series 3, a Series 4, a Series 7, a Series 24, and my Series 66, which is a 63 and a 65 combined, a registered investment advisory, because I actually managed over $400 million at the age of 24. Listen, been there, done that. I don't mind answering your direct questions. You don't have to say my roommate's dog's brother did this trade and should I do it? Email us the trade, bounce ideas off. It's all part of TheoTrade. Listen, the Ultima Income Generator course, here's the curriculum that I want to explain. I will explain exactly to you what TheoTrade incorporates. You're going to learn how to generate consistent returns, okay? How to build a portfolio of high probability trades that generates consistent monthly returns, okay? Starting capital, $2 grand. Detailed entry and exit criteria, okay? That's the criteria. That's the recipe for selling options premium while keeping risk at minimum. You're going to discover option Greeks and learn how to manage your positions through one easy number. Learn to use a risk array. The risk array is possibly the coolest thing you're ever going to learn. It's one of my favorite things that I've ever done in any class, right here in the Ultima class. The risk array doesn't show you what your risk is now. It shows you what your risk is in the future. It's a stress test. It's exactly like what the Fed does to the banks. We're actually going to teach you how to do that. You're going to learn how to properly allocate in a way that reduces risk. You're going to discover risk mitigation techniques like risk twist spreads. To hedge even the most extreme environments, you're not going to get caught off guard by the market. Listen, the market, you may wake up and be like, holy smoke, look what the market's doing. You're going to be hedged for it. How to sell premium in small accounts. By the way, there is an entire 90-minute segment of this class that just talks about small accounts, retirement account, with innovative new trading products that have never been available before. So you're going to learn how to sell premium and relatively new products, okay? Because those products tie up considerably less margin. In addition to this, just bear with me for a second. I just put together a new class, okay? This new class is new. Why? I wanted to make Ultima even easier. So I put together a class called Inflection Point Spreads. It's a 3-hour course. It just recently got archived, okay? It also has a class slide deck. What is inflection point spreads? It too is going to teach you how to sell premium. It's got high probability, okay? But here's the cool part about inflection point. You get to hedge in the most extreme environments, but the detailed criteria for inflection point spreads helps you keep risk at a minimum. But here's the crazy part. You actually put on the premium sell and the hedge in one trade. So basically you go splat and your inventory's on, all in one trade. You're going to learn to analyze inflection point spreads. So you're never going to get caught off guard by risk. okay? And you're gonna find how inflection point spreads can safely allocate in any account size. The best part of the inflection point spread, I'll show you what one looks like, because here's one, there's the hedge, here's actually the premium sale. The coolest part of the inflection point spread, you can do it in the middle of a marketplace just totally tanking. I mean, you can step up to the plate and be like, markets are crashing. Put that trade right on in the middle of the crash, not gonna make a difference. Listen, TheoTrade is a completely riskless trade. We have a 90-day money back guarantee. I like to tell this to people before I even explain all the little nuances of TheoTrade and everything that's incorporated with TheoTrade. We have a money back guarantee. This is 90 days. If you're not satisfied in 90 days, at any point in 90 days, there are no conditions whatsoever. Just email support@theotrade.com. We don't even want you to call us, okay? Receive a full refund. The money back guarantee stipulations, there are none. Again, I want to reiterate this because it's important. We want people to come here that want to learn this business. We are approaching 6,000 active clientele, okay? It's a 90-day money back guarantee. Check it out. It's completely riskless trade to you. And we do that because we rationalize like, hey, listen, okay? Everybody's initially a little worried about coming to anything new, which is fine. You know, that's natural. Check it out for 90 days. If it's not for you, whatever. By the way, it's not going to be like, you know, we want to part on good terms. But again, we want people that want to be here. So you can email us support@theotrade.com anytime in the next 90 days. You know, there's no stipulations. There are none. Anything comes up, like life comes up, we're coming into summer. Oh, I can't do this. Whatever, get your money back. No excuses, no questions, no commentary. You know, you don't have to say my dog got sick. Like, I get it. Life gets in the way sometimes. No excuses, no questions, no commentary. So by all stretches, you know, of the imagination, do whatever you want. By the way, somebody was asking if, yeah, you can stream this to Windows, to Mac, to anything. Okay, I'll actually show you TheoTrade here momentarily. Windows, Mac, mobile. Okay, people are always on their mobile devices. Actually, number one way that we're streaming is still on a computer, but the amount of mobile is pretty huge these days. If you go right now to theotrade.com Skew, you can enroll. And I'll even show you the prices. It's theotrade.com/Skew. By the way, that's S as in Sam, K as in, I don't know, kick, E as in Echo, W, theotrade.com/Skew. In fact, here, let me take you briefly to this page because I want to show just a handful of items on here. Okay. First of all, when you come to theotrade.com/Skew, you click add to cart. All right. There is a 90-day money back guarantee. Make sure to put your phone number in here. Your phone number will automatically enroll you for text messages. All right. And by the way, we're not going to send out like a million text messages. Don't think we're going to be blowing up your phone in the middle of the night. Okay. A busy week, you may have 3 to 5 text messages in the busy week. Not so busy week, you have a text message, maybe 1 or 2. Okay. 3 to 5 in a busy week though, because we don't want to overwhelm you. At any point in time though, we have portfolios on the site that you can actually look at if you're looking for more trade ideas. Okay. By the way, it's $300 for 3 months, period. It's $300 for 3 months, and any way you want to put it, it doesn't get better than that. And if you, after 90 days, you don't like it, whatever, you get your money back. Anytime in the next 90 days, you can watch as much content as you want. That's up to you. I mean, this is why we have, you know, just under 6,000 clients here. The other thing, this is not a membership. It's not a membership. It's $300. What happens after 3 months? If you want to do it again, pay the $300. It's up to you. Okay. I mean, that attitude it's what gotten, you know, it's gotten us to where we are. This is actually what TheoTrade looks like. This is actually a chat room. You can talk to every other client. It's all in real time. Okay. So, you know, feel free to chat into other clients. By the way, the instructors are all highlighted. So any instructor in here would be highlighted. Everybody else is, well, not highlighted. If you want to see what the start here menu, get you ramped up for it. Options, you know, classes, there's hundreds of classes to look for. I'll show you all that here momentarily. But again, to enroll for it, you just go to theotrade.com/Skew. As you are enrolling, I will then continue on to explain every nuance of TheoTrade. And I just tell people right off the bat, it's $300. That's 3 months, including trade alerts, including everything, including email support. There's no additional add-on, do a little love, whatever. Okay, it's TheoTrade.com/skew. The first 30 people to enroll get the money back guarantee. We do that to incentivize you to enroll today. That's fine. Anyway, it's TheoTrade.com/skew. As you are enrolling, I will let people know that you are enrolled. Okay, I can see your first name and your last initial, and I'll read those off as we actually go along here. Anyway, some of the bonuses. Okay, what are the bonuses? When I say bonuses, okay, I want you to understand TheoTrade includes everything. We go beyond one class or one indicator, right? We understood very early on in this business that people, and again, I'm looking at your questions coming up on my mobile device too, but we understand that people, they wanted an education firm that provided like an all-encompassing experience. By the way, every script is included. Everything is included here. Like we don't, again, this is no holds barred approach. I always show that to people too. Like I don't mind. People ask me all the time while I'm live. They're like, "You show me your account." Here you go. Here's my account. It's like not all that exciting after you watch it for umpteen months in a row. And people that come here to TheoTrade, there's no education out there. I don't care if you pay $30,000. You will not find something anywhere near or close to near what we can provide for $300 for 3 months. Okay, bar none. I'm going to tell you that right now. And the reason I'm so adamant about that, okay, you wait and see who the instructors are here. Okay? We have 7 full-time instructors, including myself. So this is a pretty stacked crew here. We didn't mess around when we were building TheoTrade, and we brought on the best of the best in this industry. Okay. We also understood, having come from like this brokerage background, we saw all these education companies charging people ridiculous fees. And people are getting charged like literally $20,000 for education. Okay. We know thinkorswim turned around and bought Invest Tools at one point. It's crazy. They're charging people $24,000 for 18 months. Okay. We'll blow it away for $300. First bonus, we give you a quick start beginner's guide. This is all part of TheoTrade. And I want to make something clear. Everything that I'm displaying right now, okay, is part of TheoTrade. There's no if, and, or but about it. So you get a quick start beginner's guide. What is it? It's to ramp you up from absolute novice to the most extreme, okay? I'm going to show you exactly what the quick start beginner's guide is. It says the start here menu. This is TheoTrade. What does it look like? Options 101, 201, 301, preparing for your trading day, order execution. You can be the most experienced trader in here, but I promise you, I'll know more about order execution. When you actually click confirm and send, every little route that the trade takes. Crash course on Greeks. Nobody has the depth that we do. Okay, by the way, everything in the start here menu, this is all from me. I built every single class in here because I'm adamant about this stuff. And I'm telling you, this one little thing like order execution part 1, 2, and 3, that'll save a couple of you thousands of dollars a year, right? There's nothing like that. That's the start here menu. Okay, so that's the first bonus. Second bonus, we give you access to every class we've done since we started, which is in 2016. So what does that look like? Okay, you want to see every class we've done? Welcome to the TheoTrade archive. Classes are options, option newbies, technical analysis, futures and bonds, stocks, day trading, hedging, trend trading. I'll be a trend trader, pairs trading, mindset. Yeah, we even have an in-house psychologist. It's all part of it. Like if you wanted the option classes, I am your resident option geek. Here, okay, brand new class just came out last week. It's called Z spreads, okay? Inflection point spreads, income accelerator, the Ultima class. So if I click on this for like, inflection point spread, what does it do? It's ready to roll. It's starting to play. Okay. Literally, you can see everything. Apparently, I was in Arizona at this time. So we're actually explaining what the strategy is. Then in part two, what do? We start going through the criteria, selling out of the money put, right? Which puts to sell, what the deltas should be. It's all in here. Okay. Look how many classes though are in the archive. And you go, well, what do you get access to? Everything. We don't hold back. We built Netflix for traders in here, right? So you can see some of the classes that we have in there. Next, we give you a VIP trading pass. What is that? Access to our chat room. We have a chat room. It's live. How often? 6.5 hours a day now. We just stream all day, every trading day. Do you have to be there every day? Of course not. Now, nobody watches everything, but all of this is also archived. So what you're looking at now, this is a day trader. This is Tony Rago. Okay, so Tony is actually live right now. But along with this, so we give you a live trading room. A lot of people charge like $500 a month just to go to a trading room. It's included here. So we give you 3 months access to it. We give you a live trading room. We give you all the classes. Okay, we do text and push notification. By the way, if you're outside the US and you can't get standard text messages, we do push notifications because anywhere in the world, it's through our app. There's 5 different trading portfolios. We also do daily coaching sessions. Okay, what's a daily coaching session? We actually have a professor of finance from DePaul University that moonlights with us. His name is Jeff Bierman. Jeff actually, Professor Bierman actually comes in and does a structured class once a day, all archived. Also, we answer your trading questions via email. All instructors have to answer questions. Okay, as crazy as that sounds, whatever. There's just under 6,000 clients. We answer a lot of emails every day. We spend a few hours a day answering email, usually before the markets open or after the markets close, depending upon or Pacific time or Eastern time. So it's like another $1,000 support and trades. Here's the trade instructors: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, CMT, Steve Slim Miller, okay, Tony Rago, Blake Young. All of us have, okay, our distinct area and specialty. So for the most part, like Jeff Bierman, he's our analyst, okay, and chief market technician. He also built most of the thinkorswim charts. So if you've ever been on the thinkorswim platform, there's a debt of gratitude to be owed to Jeff Bierman, who built off their half the studies. Matt's market neutral. Corey Rosenblum is the resident swing trader. Brandon Chapman, macroeconomics, technicals, fundamentals, kind of a fusion between macro and fundamental. Like, he's phenomenal in there. Steve Slim Miller does a lot of our in-house psychology. Tony Rago, that's who you just saw live a moment ago. Blake Young, market profile, former hedge fund manager. This is the whole crew kind of working from home during COVID. We give you access to every indicator and scan that we've ever built. There's nothing, okay, that we won't hand you from day one. So these are proprietary. We built them, we hand them to you. Gravity points, expected moves, NQ levels, next generation squeeze indicator, sizzle scan, it's all included. It's another $1,800. Bonus number 4, TheoTrade Live portfolio. This is exactly what you just were taken through of 2021, okay? We give you what? There's a new positive theta. It's the Ultima premium selling, no holds barred trading approach. You can see everything I do, okay? Full disclosure on all trades. By the way, I see some of the questions coming in and I'm definitely gonna answer those. So you get to watch me trade and discuss those trades like literally like never before, okay? So it's all included. In addition to it, we also have a TheoTheta small portfolio. As I was showing here over in the Tastyworks account, I only have $774 tied up in that one position. Why? I wanted to build a portfolio for individuals that had only $2,000, or $5,000 in an IRA. And again, this is an IRA. So you can't say, oh, I can't do that in my IRA. You can, and this is it. I'm doing it in my IRA right now. So that's all included. The portfolios are included. This is what the portfolio looks like. It couldn't be more simplistic. You just copy and paste trades, copy and paste trades. We even do a weekly video. I know some people look at this and they think to themselves, because somebody just chatted this in a moment ago too, and they said, this is crazy, man. This is so much stuff. I get it. But I think that in any situation, you'd rather be a little bit overwhelmed rather than underwhelmed. We give this all to you, and maybe you can grow into it. But it's $297. It's not the end of the world. But let's say that you can't watch all this stuff and you don't have the time for this. This is a 12-minute video that comes out every Friday. That's it. Just watch the 12-minute video. It'll update you on everything. That and trade alerts is more than enough. Again, some people just want those trade alerts and they just want that video. It's fine. It's still worth $300. Okay. What's everything else? Well, everything else is there for you if you need it. And on the weekends and you're bored, you're done with Netflix, start watching a little bit of TheoTrade. So there's a weekly video. Bonus number 5, technical analysis toolkit. All right. If you're into technical analysis, Tech 101, Tech 201, MACD, timing-based trading systems, there's 21 other technical analysis classes. Bonus 6, the day trading treasure chest. Okay, for those of you that want to learn to day trade, we're into it. We have 2 instructors that do exclusively day trading. Nasdaq futures, day trading ES futures blueprint, consistent intraday strategies and setups. There's one other huge caveat here. Here at TheoTrade, you never, ever have to worry about the day trading margin rule. We actually discussed how to circumnavigate the day trading margin rule. Bonus 7, mindset mastery. This is one where I will literally say, time out, write this down. And I'm serious, write this down. The 5 essential building blocks to successful trading with Slim Miller. The reason I say write it down, sometimes classes tend to get like lost in the weeds here. You know, there's over like 150 classes now. This class, it'll change the way you think about this entire business. I don't care how long you've been in this class, or maybe you're brand new to it. I would watch that class. I think it's huge. It's Slim Miller going through his depth and experience, and now it's almost a 50-year trading career, and walks you through a lot of the pitfalls that people walk into. And it's pretty amazing. If you've traded before, you'll just get so much out of this class. I'm telling you, write it down. It's incorporated in here. We could sell that class alone for $1,000 a pop. It's just part of it. Bonus number 8, there's a quick start guide to being able to sell Ultima Premium. You know, when you first open up a piece of technology, it has like a quick start guide. We built the same thing. We built a PDF file that's just like a quick version, a quick start guide to get you started selling premium immediately. What our members are saying, this one comes from Pat. Thank you for your reply. It's very much appreciated. TheoTrade is the first educational trading service that I'm actually making profit with, okay? And one that I can see a pathway to retirement. Thanks, comes from Pat. We include everything: classes, coaching, email access to the instructors, live trading room, indicators and scans, mobile access. Everything you're going to need to succeed in this business, okay, is important to us. And it really is important to us. Mobile access, it's all there. We literally built the Netflix for traders. We're $297 for 3 months. And that includes everything I just showed you, including, like, there's new monthly classes. The inflection point spread class, we just did it a few weeks ago, but there's also a Z spread class, okay? You go to TheoTrade.com/Skew. And again, I'll bring you over there because I think there's a couple of questions that came up in here. This is TheoTrade.com/Skew, okay? It's the ultimate income generator class, but it includes 3 months of access to on-demand recording, the inflection point spread class. It also includes everything I just mentioned in here. And yes, there's still a money back guarantee, right? You get 90 days. And I'm just going through everything in here. If you click add to cart, in the add to cart, again, I'll reiterate, just put your phone number in there. Make sure you put your phone number in there, because otherwise we have to manually put your phone number in there on our side to get you text alerts set up. Other than that, it's a single payment, 2 payments, 3 payments. We don't care. Again, it's as hands off. And again, there's a money back guarantee. So we're, again, very, very straightforward as to how it works. Also, it's not a membership. Everybody asks that question. Is it a membership? We do not auto renew you after 3 months. You have to actually say what's called positive consent. Again, it's a completely riskless trade. There's a 90-day money back guarantee. If you're not satisfied anytime in the next 90 days, just email us, support@theotrade.com, receive a full refund. No excuses, no questions, no commentary needed. Like, as I say all the time, we truly do want people that want to be here. Like, if you look at the chat room in here, okay, it's a lot of traders, but everybody kind of knows everybody else. Like, you kind of go through here, they're talking about bidding, okay, we go up again, VWAP. A lot of people are having fun in here, and that's fine. Okay, it's part of it. It's a community of traders. And that's why I say we really want people that want to be here. If you receive a refund, you can keep bonus number 1 on us. The other thing is, if you receive a refund, you can view the inflection point spread class. You can view any of the classes. As long as you remember, you can download some of the criteria. Listen, I'm not telling you, I don't want people to come here, pay $300, download a bunch of stuff, and then bail on us. That's not the intent. The intent is watch the class, hold our hand, email us. We're here for you. Again, all you have to do is get in a TheoTrade now. There's 30 riskless spots on the TheoTrade deal today. Why do we do that? To incentivize you. I mean, listen, okay, We give you unlimited email mentoring, which means you can pound us with emails and, hey, am I doing this trade right? In fact, I encourage that, probably more than I should, but I encourage that. Shoot us an email, okay? Make sure you're doing this stuff correctly. It's $297. The riskless offer has never been available before. It's got Ultima income generator. It's got inflection point spreads. It's got all the other classes, but it's a no stipulation money back guarantee. And we do that, again, to incentivize people. Here, close my year-to-date profit from Ultima Trades has paid for my yearly TheoTrade subscription, comes from John. This is everything today. It's Ultima, quick start guide, okay? It's over 100 classes. This is access to the chat rooms. This is the TheoTheo portfolio, technical analysis toolkit, the day trading treasure chest, the mindset mastery, which is the Steve Miller class, quick start guide to Ultima Trades. Again, what our members are saying, Jeremiah, our first 4 trades following exactly the details in the Ultima class, just closed out using good till canceled order set right after getting into the trade. It's paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. If you go and follow me to this link right now, it's theotrade.com/skew. I just wanted to reiterate, theotrade.com/skew. Here's actually where you find the auto expected move indicator. For those of you enrolling right now, you don't have to download the indicator. All the indicators are on TheoTrade, right? For those of you enrolling, all you have to do is click add to cart. Again, kind of follow some of the directions in here, address, postal code, phone number, credit card information, whatever it may be. Some people might choose, even things like PayPal, it's fine, okay? Whatever works for you. And I'll throw the address up there again. It's theotrade.com/skew. I'm going to come in here and answer a couple of questions. I'm also going to read off a few names. Okay. Again, there are 30 riskless spots. I'm going to answer some general questions and then I'm going to answer some specific questions. Ronaldo R from Texas. Okay. Alan T from Florida. Raphael K from Singapore. By the way, I've spent quite a bit of time in Singapore on the ground there. I actually opened the thinkorswim office in Singapore back in 2008 and 2009. Edward M from Florida. Lesek K from UK. Joseph P from Texas. Paul S from Idaho. Kerry S from California. Ian M from Canada. Jeff Y from Arizona. And David F from Nevada. By the way, it takes me about 5 minutes before I actually see your name populate. The names I just read off, okay, are individuals that enrolled. Thank you guys very much for enrolling. As you're enrolling, I'm reading off the names. All of you are enrolled. Obviously, we see your name here. And you, of course, have the 90-day money-back guarantee on there. So let me move on. I'm going to answer some general questions, then some specific questions. Again, I'll read off more names as I see them. This one actually is a little longer ago, but I wanted to read it. It says, wanted to drop you a quick email. I think the class is wonderful. I've been stretched each session, but not beyond my capability. After each session, okay, I watch the recording and do the homework. I feel that my knowledge of options trading is growing rapidly and steadily. Obviously, I can't speak for my classmates, but this is going very well for me. Thanks for the great instruction. Okay. This comes from Todd Summerall. I wanted to throw this one in here because it's this is representative of the kind of emails that we're willing to answer. And it says, don't know if you remember, but I emailed you a few weeks ago and told him my delta was positive a couple thou or more. That basically means this guy was in a massive long position. I'm like, you got to get out, man. You got to get out or you're done. I told him to smash the whole position. He said, you told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you for your information. Before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. And I did use that one because I thought it was an excellent representation. So let me answer some general questions, then I'll get into specifics of here. Again, as you guys are enrolling and I'm looking at some of the names populate, as I said, it takes me just about 5 minutes before I see some of the names populate in here. Yeah, give me a couple of minutes because I see a bunch more names just populated in here, more than I can even read off. I'm going to answer a couple of generalized questions, and I'm going to get some specifics in here. So first and foremost, again, it's theotrade.com/skew. Somebody was just asking that again. People always ask what they need to get started. But listen, that's what we're here to do, is give you everything you're going to need in this business. You need a laptop? You don't even need a laptop. I think I can argue that you can use an iPad. You don't have to have like the super special iPad anymore either. You can just buy like the $300 iPad in Walmart. You're good to go. Internet connection. Okay. We have everything you're going to need from novice to most extreme. And we are more than willing to answer questions. And I actually like, both ends of that spectrum, the novice and the extreme. Number two, this is not a membership. We don't auto renew or auto bill. The one thing I think that I'm at least adamant about, I don't like the gym memberships that never stop. I always think of like when COVID started, the gym membership kept billing me and I'm like, what are you doing, man? I can't even go. The place is closed. Like, oh, okay. We won't listen. You don't have to have a reoccurring stream in here. The one thing that even bothers me about Netflix and stuff, they just hit your card every month. We don't do that. $300, okay? And if you want to do it again after 3 months, we ask. That's it, okay? Number three, we provide weekly video updates on all the moves we make. So in 12 minutes, you can get updated on everything we did on the previous week. That's important. Number four, we archive everything. Every single word spoken at TheoTrade is archived. The cool thing is you can watch it anytime you want. Number five, if you have access to a mobile device, we have TheoTrade Mobile. You can download it and view the archives right off the mobile device. The reason I mention this is because we archive everything. When we archive it, you can actually watch it at like 2 times the speed. I sound like a chipmunk, but it is what it is. Make sure we're good. So, I sound like a chipmunk, but it is good. Oh, add your cell phone number. I know this is the 3rd time I mention it. Add your cell phone number when you're enrolling because you're going to receive text alerts. Number 7, email us anytime. Anytime you can email us. Give us 24 hours to respond. The only reason, please, the only reason I say this, people will literally email me on a Friday afternoon. There's 5 minutes to go to the cash close. They're like, I'm in trouble. I'm like, listen, we trade. I predominantly answer emails very early in the morning or very late at night. It depends. I bounce from St. Croix in the US Virgin Islands, where we presently are. I bounce from here and I'll go back to Arizona for about 4 months out of the year. Okay. I like Arizona in the winter. I have to go back to Arizona in July. I hear it's nice there in July. No, not really. It's like 115 degrees, but it's a balmy 115. Anyway, I bounce back and forth. So it flips my whole schedule over because here the markets open at 9:30 in the morning. There they open at 6:30 in the morning. So it's a little bit of a free for all. Anyway, we don't usually answer those emails like during the trading day. Try to get ahead of the problem, email us. Number 8, you gain access to everything we've done here at TheoTrade since we started TheoTrade, period. Every archive is searchable. We built like a little Google search engine within TheoTrade. You can search for everything. Number 9, variations of trades can be done inside of an IRA or retirement account, okay? With as little as $2,000. Number 10, okay, we can help you get approved for options. Very often people say, my brokerage firm won't let me do this. That's okay, we get it. There's a couple of different brokerage firms that work with us. Number 11, there's 30 riskless spots available, of which many of those have been filled. A couple more names: Douglas Z from Canada, David S from Indiana, Delbert W from Georgia. Listen, get results, take action, enroll for TheoTrade now. There's no risk whatsoever to you. I'm going to answer some more specific questions here. So as I read some of these specific questions off, and again, it's theotrade.com/skew. I'll just throw this up here. In fact, here, make it a little easier. It's theotrade.com/skew. Make sure everybody can see that address right there. And as I'm actually going through here, feel free to ask a few more questions. Okay. So let me get in here. So one of the first things somebody said, do you sell index options? Yeah, I like index trading. It's okay if you're not that heavily into indices, but the indices make, I think, the world easier. You don't want to get involved in stuff like Twitter that can get bought out and so forth. So trading some of the index products, in my opinion, is a little bit easier. Somebody said, can I use this as a traditional IRA? Okay, so you can use a traditional IRA or a Roth IRA. It is if you're going to trade in an IRA though, and I'm going to let you know right now, that it depends on the brokerage firm, okay, that you are, it depends on the brokerage firm that you're actually trading with. Not every broker will allow you to do everything. Like some people say, well, I'm with Fidelity. Fidelity doesn't cater to anybody that really wants to trade options. And it's something that comes up a little bit, you know, so just be understanding of not every brokerage firm is going to allow you to do everything, but we have brokerage firms that work exclusively on these types of positions where this counts as little as $2,000. Okay. So here's one. I actually really like this one. You talk of selling premium over a 90-day contract period. In all your example, the duration is about 30 days. Okay. Why don't you sell, 90 days? So the 90 days, like, listen, the duration of a trade may only be 30 days, but we need the right vehicle to get there. The 90-day options or the 100-day options or the 120-day options are the right vehicle. Selling shorter dated options carries with it an extraordinary amount of risk above and beyond. So all I'm doing is using longer term options as a vehicle. It's kind of like, how do you want to get there? Do you want to get there in a race car or do you want to get there in a bus? The bus is probably going to be a little bit safer, okay? And, it's a little bit slower, but, well, it's a lot safer, and I'm okay with that. The decay rates, though, of the longer duration options are phenomenal at this point, okay? Oh, I like this one, too. Somebody said, since one cannot sell naked options in an IRA, will this still work, okay? That's where you trade out of. That's actually a huge misnomer. I'm going to tell you something interesting. The rules about selling options naked in an IRA completely changed. You don't have to have a lot of margin either. Most brokerage firms didn't change with that rule change. You can do anything you want inside of an IRA. You just have to know which brokerage firm to do it with. So if you trade out of an IRA, allow me to once again reiterate, so do I, okay? So do I. Oh, look at this. There's like a brokerage issue over here. So I know I use my IRA constantly. In fact, you can see it says IRA right here. And here is the IRA. Here's my IRA. Just looking up here. Oh, there's some better quotes. Anyway, this is also an IRA. So you can absolutely trade inside of the IRA these days. So again, that's kind of a big misnomer. That you have to have this account or that account. Okay. Have no fear. The rules have actually changed and changed quite considerably for the best. By the way, a couple more names. Howard M from New York, Philip H from Arizona. Got a couple of Arizona people in here. Nina S from Virginia. By the way, in Arizona, usually when I'm there, I'm up in the mountains in Payson, Arizona, because I don't like 115-degree heat. As lovely as 115 degrees happens to be, we have a place up in the mountains up there, okay? All right, back to a few of the questions, just one or two more, and we'll wrap things up and I'll type in, okay? Somebody said, can you handle a portfolio which is $5,000 to $6,000? Absolutely, absolutely, unequivocally, yes, okay? All right, I'm just trying to grab one or two more questions over here. Whoa, okay. Oh, can you explain why there's larger theta decay and out of the money options? Those way out of the money options that are further out in time, actually, technically, it is not theta decay. It's actually Ultima. What it is, when you're selling options further out in time, and again, I mean, I can actually show you this, and we do show you this. I think the name is Millie in here. We show you this in the midst of the class, but the options that are further out in time have skew, right? And what's going on is the skew, as they come closer in time, the skew collapses. So the volatility is being pulled in. And that's actually why we call it Ultima, because it's the volatility, we're not just trading for time decay. We're actually trading the volatility collapsing, moving forward through time. That's what's changed wildly since the onset of COVID. Like, why did it change? Initially, it had to do with like the risk in markets changed dramatically after COVID, but also the inception of just tons and tons of accounts. Okay. So I'm going to wrap it up there. I want to thank each and every one of you for joining us today. If you need anything, you can always email us, support@TheoTrade.com. Again, I urge you, you enroll for it. There's a 90-day money back guarantee. There's a handful. There are 30 spots, okay, that were open. There's a handful of them left. I think I've read off about 26, 27 names in here. There's a handful of spots left. You enroll now. You can email us anytime you want. Just put Don in the heading if you want it to go directly to me. I'll be live tomorrow morning, first thing in the morning, right at the market open. So you can see the schedule in there. Come in, chat in with us. It's going to be some hectic couple of trading days in the next, well, for the foreseeable future. To enroll now, just go to TheoTrade.com/Skew. Thanks, everybody, and have a wonderful afternoon. Bye-bye.